about what happened with the CFO there. How important is Caterpillar as important of a global bellwether as we make it out to be?
So important that we just have these two stories together. And I will say this. Consumer confidence has never been higher and corporate confidence has never been lower. The gap between those two things is amazing. That manifests in lower CapEx and certainly manifests in companies not going out and taking on new projects. So that uncertainty by the corporate and the industrial world has slowed down industrial companies across the board. What it takes to close that gap is an unknown.
There's another.
I would just throw in, it's interesting the dislocation here between what's happening in the digital world and what's happening in the physical world, right? Who do you think is paying for AWS and Azure and all that stuff? It's companies buying that stuff. Granted, it's by the drink, and they don't have to buy a huge piece of equipment to do it. But you look at Caterpillar, you look at Deere, that's also going through a situation where their distributors are working down inventories because the customer is uncertain. It's a very interesting time to have more of a cloud and buy the drink model.
All right, so I'm glad you brought that up, because our next topic here is the semiconductors. Speaking of that kind of bridge between tech, the people who spend, the semiconductors are clearly feeling the heat from uncertainty around China. The SMH, that's the ticker of the semiconductor ETF we track often, is now on pace for its worst week since August. And John, how important, we talk about CAT as a bellwether, semiconductors have also been a lightning rod when it comes to U.S.-China trade and now the economic activity in China as well.
I don't know if we can still read semis the way we used to because of the run they've been on lately. They're not quite as stable. I mean, when I looked at today's last night's numbers from Amazon and then Microsoft before, I thought, boy, Intel was being really cautious when they said we're afraid the mega-scale cloud players will go through a digestion period in the second half, and that's why we're being cautious in our guide. Maybe they should have been less cautious given the fact that the pedals to the metal for both of them, it seems like, in terms of margins and in terms of revenue, despite the fact that they're investing in Salesforce. So you factor that in, the fact that AMD's got its own story going where console sales messed with their numbers and their guidance. I'm not sure you can draw an overall story from the semis the way you used to.
Is it important, Morgan? I mean, I think about it because there are microeconomic, company-specific, even industry-specific within semiconductors, whether it's memory, DRAM, that sort of thing, whether it's data centers. What exactly stands out to you when it comes to that semiconductor trade right now?
Two things. I think the first is, despite China phase one trade deal, you still do continue to have this tech decoupling between Chinese telcos and Huawei and U.S. suppliers, something to continue to watch. The second thing is, when you have airlines and you have freight carriers canceling flights in and out of China, those air freight numbers are very closely linked with semi-billings. Little hat tip to Donald Broughton for that data point right there. But that's going to be something to watch. It's going to be interesting to see how all these coronavirus concerns play out in terms of semi-inventories.
It's like you guys you're teeing me up perfectly, because we're going to go right from there to what's happening with transportation stocks, all right?
Yep.
Because they're taking a big hit following the American Airlines release that we just heard, Delta, United, all temporarily canceling Chinese flights to the mainland over there amid this coronavirus outbreak. The Dow Transportation Index is falling through its 200-day or longer-term moving average. And Art, maybe we'll start with you, despite I know that Morgan has a lot of expertise in transports. This market dynamic is important because oftentimes traders look towards transportation stocks and the industry as another one of those, get it theme, global bellwethers.
Right. I think there's never been a longer-term barometer for global economic activity than transports. It's just not usually right. Right now, the transports are sending us messages that we're going into a global recession. That's probably not correct, but it's also a group that overcorrects all the time. Dow theory would tell us that if the Dow Jones Industrial Average made a new high, the Dow transports would need to make a new high to confirm that. That hasn't held true for at least 10 years necessarily, so I just think that's a bit broken. The transports have their own issue right now, obviously tied to nobody traveling to China for the next, pick the period of time, and that's going to slow things down.
So that means, Morgan, with the coronavirus scare, with airlines a huge focus,
it's not just airlines, it's also the freight carriers, it's the tankers. Baltic Dry Index, and I realize it doesn't carry the weight it once did, but it has absolutely cratered if you look at those rates as well, because it's all those commodities, those dry goods that are moving back and forth that everybody's concerned are now going to not be in demand in China right now if people aren't getting back to work in factories. All of those are cratering right now.
Of course, Morgan would bring Cape Max and Panamax vessels into this conversation. John, when it comes to that activity, what part of the market structure do you think, in your mind, would most represent maybe either a turn for the better or worse when it comes to the overall market?
Well, I don't know. I think the traditional bellwethers, as we said before, aren't working. I think you got to look also at the digital economy and see what it's doing. I mean, it's not like people in China have stopped doing everything. They're probably at home on screens, on
watching
devices.
Streaming videos.
Right.
Yep.
I mean, somebody's going to benefit from that. Plus, I mean, the real uncertainty here is we don't know how long this coronavirus outbreak is going to last. We don't know when the numbers taper off. You heard some people in China at first concerned that the government didn't have its arms around this. Now you got the WHO saying China's doing a pretty good job. I don't think we're going to get a really good sense on balance of how this is going for another couple of weeks based on what the experts are saying, and then we'll see.
All right, great market discussion. We covered a lot of ground. Art Hogan, National Securities, thank you very much. Our very own Morgan Brennan and John Fort, you're going to stick around because we got a big conversation about that digital economy coming up later on in the show. Thanks, guys. Well, the Dow is erasing all of its gains for the month of January. Is this the start of something bigger? A top technician joins us with the key levels you want to watch. That's coming up next. And as we head to break, take a look at the Home Builders ETF. This ticker ITB, falling more than 2% today, but still up 7% just for the month of January. Home builders a very big focus. The exchange will be right back.
Tomorrow is just waiting to be created, to be reinvented and redefined. And it's those who dare to push the world forward, discover and reshape markets, and embrace the possibilities of data that will reimagine our potential and transform society as we know it. With new ideas and new technology, get there with NASDAQ.
Meeting people is my life. I was embarrassed to show my teeth. It was time to do something that was going to be permanent.
The Clear Choice one-day approach is making dental implants a reality for people all over the country who suffer from missing or failing teeth.
We have expertise that you might not find anywhere else, all in one location.
The next day, I had a new smile. Couldn't wait to show some folks.
Schedule your free consultation today. We'll even talk about financing options.
I had the best smile I'd ever had in my life.
Call Clear Choice today.
Imagine traveling hassle-free with your golf clubs. Now you can with ShipSticks.com. No more lugging your clubs through the airport or risk having your clubs lost or damaged by the airlines. Sending your own clubs ahead with ShipSticks.com makes it fast and easy to get to your golf destination. With just a few clicks or a phone call, we'll pick up and deliver your clubs on time, guaranteed, for as low as $39.99. ShipSticks.com saves you time and money. Make it simple. Make it ShipSticks.
It's either the assurance of a 165-point certification process, or it isn't. It's either testing an array of advanced safety systems, or it isn't. It's either the peace of mind of a standard unlimited mileage warranty, or it isn't. For those who never settle, it's either Mercedes-Benz Certified Pre-Owned, or it isn't. The Mercedes-Benz Certified Pre-Owned sales event, now through March 2nd, only at your authorized Mercedes-Benz dealer.
Welcome back to the exchange. A steady drip of negative headlines over the past week causing markets to slump on the final trading day of this month. Let's take a closer look at the technical side of this sell-off. Joining us now is Fairlead Strategies founder and managing partner Katie Stockton. Katie, thank you very much for being here. This is a good time, every time is a good time to have a technician on because you use history as a basis. Will things repeat themselves? What is it about this market move that is similar to ones that you've seen in the past, and what does that mean? Are we due for more downside?
Well, first, I would emphasize that the uptrend is very much intact for the major indices. Pullbacks do tend to be very sort of fast and furious. And in fact, when they are that way, they tend to be short-lived and also counter-trend. So this, to me, is a reaction to what was an overbought sentiment reading. We've had a few of those over the past year or so, and they're often worked off very quickly, meaning weeks, not months. And I think that will be the case this time around as well. We did have a sentiment downturn in one of our preferred gauges on January 22nd. This does tend to give way to a pullback, which I think is, of course, underway here still. I do still think there's downside risk. We haven't quite seen that sentiment reading worked off entirely, meaning a sort of a counter trend buy signal or a contrarian reading to suggest that fear is high enough to really give us a market low yet.
Katie, you make a living giving your clients targets. You tell them where we think it's going to go. So where is that downside target? Where should people start thinking about putting that shopping list to work or going long stocks if they've been on the sidelines or taking profits in this move?
Well, there's no magic number at which I would say that's your entry point, but we can use support levels as gauges of downside risk. They can be very reliable at times, but we want to use them in conjunction with indicators that help us understand whether we're at those sentiment extremes, at those breadth extremes, and I would argue we're not quite there yet. So the initial support that I'm looking at for the S&P 500 is right around 3150. It's based on a couple of technical factors that to me would be very reasonable as a stopping point for the pullback. After today's action, it's not too far below. And then secondary support, which would to me be a worst case scenario, is about 6% below current levels in the 30-30 area. That was a breakout point from late 2019. I don't think it's going to get that bad based on the relief that we've already seen from the overbought conditions, but we'll really wait for that upturn in momentum, regardless of the level for the S&P 500 before recommending getting back in.
All right. One of the places you also watch closely is the sentiment of the marketplace. Are there any telltale signs right now that the market is either in this state of euphoria or in this state of total shock with what's going on?
I think it's safe to say that the euphoria has been worked off here. Of course, the virus has really done that effectively, unfortunately. And yet we don't have that fear in the marketplace yet. We like to enhance the sentiment readings with breadth. We're looking at, in particular, the percentage of stocks in the S&P 500 that are oversold. And they're running about 1/3 of the S&P 500 right now. And that's not quite enough to suggest we have that low in place yet. It tends to peak around 50% of the S&P 500. So not too much more downside if indeed we're in the same kind of pullback mode that we saw about 3 times last year.
All right, Katie Stockton with some target levels to watch there. Thank you very much for those insights. We appreciate it. All right, well, the oil and gas ETF is down more than 19%, on pace for its worst month since September of 2011. We'll dig into the names and get the one bright spot in that sector. That is coming out next.
For drug-free sinus and allergy relief, experience Navage.
This time of year, I get so stuffed up, but Navage flushes my sinuses so I can breathe again.
Navage uses powered suction to flush out allergens, germs, mucus, and dirt.
My doctor recommends Navage to breathe better through my nose, and it works. Congestion's gone, and I feel great.
And Navage is so much easier than a neti pot.
Trusted by happy noses everywhere, Navage is nature's decongestant. Online and at these fine retailers.
WeatherTech is known for providing the ultimate protection for your vehicle with laser-measured floor liners and cargo trunk liner, along with seat protectors and seat back protectors. And now the WeatherTech Cup Phone with removable cups fits virtually any size cup holder and adjusts to fit virtually any size phone. Even allows easy access while charging. Whatever you drive, whatever phone you have, Cup Phone is the perfect fit. Order yours today at WeatherTech.com.
Grubhub, America's leader in food delivery, just got better. Introducing Perks, millions of dollars in deals and free food nationwide. Download the Grubhub app today and get free delivery on your first order.
At Fidelity, online U.S. stocks and ETFs are commission-free. And when you open a new brokerage account, your cash is automatically invested at a great rate. That's why Fidelity leads the industry in value, while our competition continues to talk.
Wondering which credit card is right for you? Introducing CNBC Select, the authority on all things credit cards. We do the research, you reap the rewards. Head on over to cnbc.com/select and take
keys. Check. Phone. Check. 70s playlist downloaded. Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
I think I just be myself, let it come naturally. I never try to, go outside the box.
Super Bowl 54, the biggest game of the year, is live on TuneIn Premium. Be there when the Kansas City Chiefs, dreaming of their first championship in 50 years, collide with the San Francisco 49ers' quest to bring a sixth Lombardi trophy to the Bay Area. Wherever you are when the ball kicks off Sunday at 6:30 p.m. Eastern, listen to every electric moment of Super Bowl 54 with the NFL on TuneIn Premium. Search Premium to upgrade today.
Welcome back to the exchange. We are tracking this market sell-off and looking at energy right now. That sector down more than 10% over the course of the month, and in bear market territory, down 20% from its 52-week high that we saw back in April of last year. Now, leading the declines today, you've got shares of Phillips 66, also Valero Energy, as well as Dow Components, ExxonMobil, and Chevron. Both of those names sliding to new 52-week lows in today's trade. And the ETF tracking the oil and gas exploration and production industry, the ticker XOP, is down nearly 20% for this month. But it's not all doom and gloom out there. You got shares of Marathon Petroleum up slightly today after a report that the company is exploring a sale of its gas station arm, which is Speedway. Marathon has previously said the unit could be worth between $15 and $18 billion. Well, shares of IBM falling nearly 23% since Ginny Rometty took the helm as CEO of IBM. And according to one tech expert, not even Jesus can resurrect Big Blue now. That's a big statement. We'll ask him. He explains why, and we'll figure it out and challenge him.
So Schwab taught me about four-legged option strategies. I'm going to go with an iron butterfly spread on that fintech stock.
Nice. I just tried an iron condor.
Only spread I've been introduced to is this onion chive.
It's time to trade up to Schwab, the firm invested in helping you become a better trader. Get commission-free online stock, ETF, and options trades. Expect more from your firm. Schwab, the better place for traders.
You may know Viking for our award-winning river cruises. But did you know Viking is also the best at sea? Voted by readers of Travel and Leisure 4 years in a row. Discover fascinating destinations and enriching activities on our elegant ocean ships. Designed for just 930 like-minded travelers. Viking, exploring the world in comfort.
We're going to need 500 more units pronto.
We don't have that kind of money right now, Carl.
You will in 10 minutes. That's how long it will take you to get funding through Cabbage. I know. I'm 10 minutes in the future spokes guy.
Cabbage. Business funding in as little as 10 minutes.
What's happening?
I'm really into this car, but how do I know if I'm getting a good deal? I tell TrueCar my zip and which car I want, and TrueCar shows the range of prices people in my area actually paid for the same car, so I know if I'm getting a great price. This is how car buying was always meant to be. This is TrueCar.
How's the IT department liking the Now platform?
Every time it takes care of something for us, we celebrate.
How often does... Got it.
ServiceNow, the smarter way to workflow.
Make you.
Thank you, Iowa.
Or break you. The Iowa caucuses. On the ground. At the big board. We'll make sense of this critical first test. Monday at 6 on MSNBC.
Welcome back. While the tech sector is falling along with the broader markets, the NASDAQ is holding up better than the other indexes. The sector is the second best performing one in the S&P so far this month, up 4%. Could tech be the saving grace for investors or the best bet right now? Joining us is Paul Meeks, portfolio manager at Independent Solutions Wealth Management. Also, CNBC's very own John Fort rejoins us as well. And perhaps, Paul, we'll start with you. Are you worried at all? Tech was a leadership person, sector, anything in the markets last year. Is it due for a bit of a steeper fall if the markets do fall more steeply themselves?
I think it is, because if you take a look at the tech sector within the S&P 500 last year, and that's measured by the XLK Spider ETF, that ETF was up 50% in a year in which the S&P was up 30%, in a era in which stocks typically do about 10% per year. So clearly overbought. And tech stocks are cyclical, particularly the hardware and semiconductor-oriented tech stocks. So sure, there should be some hell to pay, but I feel good enough about the long-term fundamentals that when we have a correction, and I don't think it's going to be as steep as the correction we saw in the NASDAQ in the fourth quarter of 18, maybe something to the tune of 5 to 10%, I will buy with both hands when that happens.
Wow, that's a big statement. Buy with both hands. So, John, when you cover the tech sector, you're obviously looking at everything from computer chips to data centers to web services to everything else. Has there been a place over the course of the past 12 months that's really stood out in your mind as being a place that might be, in some ways, a little bit more resilient to a downturn in the overall market?
So far, big mega-scale tech has been pretty darn resilient. I mean, this earnings season for Apple, for Intel, for Amazon just last night, Microsoft, I think has performed very much up to expectations. Even Facebook, which is kind of on the lower side as far as how they performed in earnings, still, at least so far today, trading above $200 a share, which isn't bad considering where we've been over the past 6 months. So I think the scale players, the ones who have sort of driven the S&P throughout 2019, still doing pretty darn well. And given all the uncertainty and volatility around the other names, hard to draw conclusions.
All right, so Paul, mega cap technology, John brings up a very big driver of things. Two companies in particular, Microsoft and IBM, very much a focus over the last week. One near record highs in Microsoft, one that's trying to find its way in IBM. Is IBM this generation's Microsoft? Can it turn things around?
Wow, that'll be a tall order, because a lot of people don't realize, and maybe it's counterintuitive, that just because you are a dominant tech player in the era of big iron or even the personal computer era, as we morphed into cloud, mobile, net, why would you expect a company from the first era to be as good or even a player or even relevant in the second era? And one of the things that Microsoft has done since 14 under Satya Nadella is pivot and embrace the cloud, and it's been a home run. That is the playbook that the new CEO of IBM should copy, but man, it's going to be a tough road to hoe, because IBM is in a much worse shape from the get-go.
All right, John, the last word to you here. Does IBM have a shot at becoming a Microsoft story?
Let's not forget how much people hated Apple in 1996.
Sure.
Or how much people hated Microsoft 10 years ago.
AMD?
Thinking that AMD, sure. But those are previous powers that people thought nothing could fix, and something could. Everything's not wrong at IBM, and I think it takes a distinguishing investor, takes research to know what is potentially wrong, but what do you like? You got to have your own theory about these companies. You can't rely on the idea that everything's wrong. Arvind's got his work cut out for him for sure, not just telling the story, but also isolating certain businesses, and we'll see what he does structure-wise.
All right, John Fort, thank you very much for those thoughts. And Paul Meeks, always great to get your insights on technology as well. We appreciate it. Well, that does it for the exchange. Markets are hovering right near their lows of the day. Now, the Power Lunch team picks up all that coverage. Again, the Dow down 540 points.
Good afternoon, everybody. I'm Tyler Matheson. Welcome to Power Lunch. And as Dom mentioned, we start with that big sell-off on Wall Street. We are very, very near the lows of the day. The Dow dropping nearly 600 points at one point, right on the precipice of that, turning negative for the year as fears of the coronavirus outbreak spook traders ahead of the weekend and ahead of the reopening of Chinese markets next week. They've been closed for the Chinese New Year. Plus, crude getting crushed, sinking deeper into bear market territory. On track now, worst week since May of 2009. We'll tell you how low oil might go. And later, the one bright spot is Amazon, the tech behemoth climbing back to $1 trillion market value. One trader's going to tell us the next stock that could join the $1 trillion club. Hi, Morgan.
Hi, Tyler. I'm Morgan Brennan. Here's where we stand in this sell-off. The Dow down 2% as investors get spooked ahead of China's stock market reopening on Monday after that Lunar New Year holiday that you heard Tyler just mention. Stocks are on track for their worst week since October. And check out some of the earnings disasters that are helping fuel the losses today. Chevron, Exxon, and Caterpillar all weighing on the Dow right now after disappointing reports this morning. But for more on the big sell-off on Wall Street more broadly, let's bring in Seema Modi at the New York Stock Exchange. Seema.
And Morgan, losses started to accelerate following that weak PMI read for the month of January. Plus those elevated concerns around coronavirus. Goldman Sachs estimating that the virus will lower China's GDP by 0.4%, which economists say will have a spillover effect on U.S. growth in the first quarter. Earnings today, with the exception of Amazon, not providing any relief, especially for the oil and gas producers. Of the energy companies that have reported, about a third have fallen short of estimates, and we're 4 weeks into the year. Double-digit percentage declines for a number of energy players. Noble Energy down 20%. No surprise, energy and materials, the two worst performing sectors so far this year. And those industrials under pressure yet again. Caterpillar CEO Jim Whippleby very cautious on 2020, saying construction sales in China expected to come in flat to down 5% this year. Tyler, back to you.
All right, Seema, thanks very much. And now for the latest on the coronavirus, which is contributing today's sell-off as it has been on sell-offs over the past couple of weeks. The number of cases worldwide now nearing 10,000, and that includes 6 confirmed cases now in the United States. More than 200 people have died, all of them, I believe, in China, none here in the United States. And today, Russia confirms its first case. Let's go to Eunice Yoon in Beijing now with more. Eunice?
Thanks so much, Tyler. Well, I'm at the Beijing train station. People are slowly returning back to the Chinese capital. There's still, even so, Beijing has issued a directive today saying that people, even if they come to the Chinese capital, should work remotely until February 10th. This is even as the government and businesses, as well as people, are all going to be going back to work on Monday after the Lunar New Year holiday ends this weekend. There's still so much that's unknown about this virus, and the capital here is still seeing a lot of buildings deciding to set up temperature checks, also setting up barricades as well in order to try to prevent the spread of the virus. The masks are in short supply. The city of Shanghai today decided to set up a quota as of this Sunday, so that each home address is only limited to 5 masks. The schools in Hong Kong have also decided to remain closed, or at least the territory has directed the schools to stay closed until March 5th. And you could imagine that this is all having an impact on the economy. In fact, the Transport Ministry today put out some numbers about travel during the Lunar New Year holiday, saying that during this time, overall trips were down by 16.5%. And for January 30th, this is a day when most people were supposed to and had expected to travel, because today was supposed to be the first day when everybody got back to work, that for January 30th, the number of trips was down by 84%. So a lot of that making people very nervous about what's going to happen for business activity more broadly. And we'll get a gauge of that when the markets open, both Shanghai and Shenzhen open on Monday. Tyler?
Well, speaking of that, Eunice, those markets, and there's a lot of anticipation about the reopening of those markets on Sunday night our time, Monday your time. Is there any possibility, any talk that they might not be allowed to open?
I haven't heard that so far. Most people do expect to go back to work on Monday, but the discussion here is exactly how things are going to all work out, because as I was saying in Beijing, there's been a lot of encouragement for people not to work in offices. And the point for Beijing, anyway, is that they don't want people to be gathering at all. So that's a situation that's replicating itself in other cities as well. And so a lot of different offices and brokerages are trying to figure out how they're going to be able to operate and pull this off on Monday, because there is a concern about people going back to the offices and gathering together when there, again, is so much unknown about how contagious this virus is.
All right, Eunice, thank you very much. Eunice Yoon, obviously taking precautions in Beijing. The markets are in sell-off mode for the week and the month. The Dow on track for its worst day since back in October, early October, the 2nd. Should investors brace now for more pain ahead? Let's hear about this from Michael Farr. He's president and CEO of Farr Miller in Washington. He's down in Miami, I'm told. Something's going on there this weekend. Ron Insana is senior advisor to Schroders North America. Gentlemen, good to see both of you. Ron, I'm going to start with you. January started off so nicely. It was beautiful. Everything was good. And then something happened. Was it that the market was looking for some excuse to sell off, or was it always as weak as it now seems to be, or what?
Well, I think, Tyler, you and I talked 2 weeks ago, exactly 2 weeks ago, about the extent to which the market was at least technically overbought, that valuations had risen to levels we'd not seen in some time, the concentration of market value now, including Amazon, above $1 trillion. 5 stocks accounted for 18% of the market cap of the S&P 500. And we talked about the likelihood of a 5 to 10% correction. Now, whether the coronavirus is a reason or an excuse remains to be seen. But clearly the market had been overextended, and we don't know now the extent to which this virus, and Eunice showed some extraordinarily stark numbers, how much of that spillover effect of weakness in the Chinese economy, which I would kind of compare in a strange way to the cocooning that happened here in the U.S. after 9/11. If you go back to that period in which the 2 weeks after 9/11, no one left the house. For a month, no one traveled. And there was, it had an impact on the U.S. economy at the time. Mm-hmm. It seems like something similar is going on here, but it may affect the entire global economy for a period of time that would reduce first quarter GDP and first quarter earnings estimates.
Interesting analogy there, Michael. Let me go through a couple of things. Were it not for Amazon, the S&P would be far worse than it is. Were it not for IBM, the Dow would be worse than it is. And as I look at the economic landscape, yesterday's GDP numbers in the United States were okay, but not great. The European numbers out this morning were not good at all. Italy and France in contraction. And obviously China is slowing. The Chicago PMI now at the lowest level since December of 2015. Yeah. Are we in for more trouble here? Is this potentially a longer slide than just a transient one based on the coronavirus?
Tyler, I think the answer is clearly yes. There is the potential, a great potential, for a continued slide. Will it happen? We don't know yet. And I think the key is going to be the duration, essentially, of as Ron said, the Asian cocooning, the shutdown. We know that parts for automobiles aren't getting to Ford plants all of a sudden from that huge area in China that is responsible for a lot of those parts. So companies like Ford are going to have to start shuttering production once they run out of inventory to make parts inventory to actually produce cars. We know that the airlines are doing it. We've seen 3 of the domestic airlines today, United, Delta, American, joined British Airlines in saying we're going to stop flights to China. So when you see this cocooning and this shutdown, we know that economic activity is going to face a significant headwind. It did happen during SARS. We saw it then, too, and a lot of airlines suffered. Northwest Airlines chairman told me at that time, CEO was Doug Steenland, said it was hundreds of millions of dollars in top-line revenue at the time. So if this lasts, yes, it creates an economic headwind that will affect China first, but in this global economy is going to affect all of us. Will that drive markets lower? Is the, big question out there. Yeah. I think after a market run like this, you have to be cautious.
Yeah. Ron, we've seen yields come off pretty dramatically this week. We've seen the yield curve flatten, even invert in some places. Again, what's the bond market telling us?
Well, I think that's a very important piece, Morgan, as you correctly point out. I mean, we now have 10-year yields below those of 3-month yields for the first time in quite some time. The curve had steepened after the Federal Reserve lowered interest rates in 2019. And so we were concerned, in the middle and latter part of last year about the message of that inverted yield curve portending a recession 6 to 9 months down the road. This certainly recognizes the fact that global growth is now in question, and whether or not it also leads to an easier Fed is an open question as well, because we do have June Fed fund futures now pricing in a rate cut, something that really wasn't talked about much so far this year. Everybody assumed the Fed would be on hold for all of 2020 as we move towards the presidential election as well. And I think, as Sarah Eisen pointed out early this morning, and I thought this was an interesting observation, the fact that Bernie Sanders is now running neck and neck with Joe Biden creates another piece of uncertainty for the market on the political front that may help to be exacerbating this sell-off, at least in the short run.
Yeah, Michael, I mean, even before the coronavirus and all the uncertainty we're seeing play out there, you had all the issues around Boeing and 737 MAX and what the halt in production is going to mean to economic growth and those readings from a macro level here in the U.S. in the near term. Is it safe to say that, at least for the first quarter, based on what we know now, it's essentially a wash in terms of getting any kind of proper, accurate economic reading?
Yeah. I think, Morgan, you're right. It's going to certainly cloud exactly what outcomes are, right? I mean, so this is going to cloud the earnings pictures, and those reports that we get in April for the first quarter earnings are going to be, every one of them is going to be referencing this and how long it's lasted, and really if it's going to have spillover for the rest of their years or not. I think that one of the things that I think Ron said too was part of the expectations here. What are market expectations? Market expectations were for the coronavirus to be kind of a nothing. And while that may be true, thank goodness, in terms of mortality rates, we might be underestimating those economic headwinds. So more important than ever, look at your portfolios and find where you have exposure. Market's correct. They do go down, and owning companies with solid balance sheets and good returns on equity and cash flow becomes really important if this downturn lasts longer.
All right, gentlemen, Ron, gone, far out. See you over the weekend.
Thanks.
Coming up, a big sell-off on Wall Street right now. The Dow is down more than 500 points. Coronavirus fears hitting stocks ahead of the opening of China's market on Monday. But is this sell-off good news for some? We're going to tell you who might actually benefit when Power Lunch returns.
Through the AT&T network, edge-to-edge intelligence gives you the power to see every corner of your growing business. From finding out what's selling best, to managing your fleet. To collaborating remotely with your teams, giving you a nice big edge over your competition. That's the power of edge-to-edge intelligence.
At Fidelity, online U.S. stocks and ETFs are commission-free. And when you open a new brokerage account, your cash is automatically invested at a great rate. That's why Fidelity leads the industry in value, while our competition continues to talk.
In a changing environment, consistency keeps us on track. Columbia Threadneedle Investments.
In the old days, advertising was about brand building. Today, it's about driving sales. WPP operates in 113 countries around the world. Google, Facebook, Alibaba, they're really driving the industry. So you're seeing ad dollars shift much closer to the point of sale. There's an explosion of data. You'll see a much greater application of AI to drive insights. We're really seeing a world being reshaped by the growth of the digital platforms. This is the future of business. I watch.
Hello. I'm your captain for today's Virgin Atlantic flight. Please drop everything and pay close attention to the following announcement. The sail is now on. Our crew are ready to take your bags and stresses away. The cocktails are ready to serve, the movies are loaded, and we're all set for takeoff to the Caribbean. So, take your seat in our award-winning economy class. We're ready to go when you are.
The Virgin Atlantic sail. Fly amazing for less. For more details, visit virginatlantic.com.
TuneIn is your ticket to on-the-glass NHL action. With the NHL on TuneIn, listen to every one-timer, hear every stick save, and experience every goal for every team across the league.
Featuring home and away feeds for all 31 teams.
TuneIn brings the excitement of the NHL home to you all season long. Plus, with NHL On Demand, skate back in time and relive the best moments of the season
while listening to past games in their entirety. Listen to the NHL on TuneIn.
Search NHL today.
Look at that chart of bond yields, and they are falling again today. 1.5% on the 10-year right now, 1.534. That means even lower mortgage rates for home buyers and people looking to refi. Diana Olick joins us from Washington with all the details. Hi, Di.
Hi, Ty. Yeah, mortgage rates have now fallen to the lowest level in more than 3 years as investors worried about the coronavirus rush to the relative safety of the bond market. Mortgage rates loosely follow the yield on the 10-year Treasury. Now, the average rate on the 30-year fixed is at 3.49%, according to Mortgage News Daily, matching the lowest level since October 2016. That's down from 3.8% at the start of January and 4.58% a year ago. And that means about 9.4 million borrowers could save an average of $272 per month if they were to refinance at a lower rate, according to calculations by Black Knight, which defines refinance candidates as 30-year mortgage holders with a maximum at least 20% equity in their homes and credit scores of 720 or higher, and they could save at least 0.75% off their current first lien rate by refinancing. Now, that's a collective $2.6 billion per month, the highest potential savings in 20 years. And that's not even including potential cash-out refinances. Homeowners today are sitting on a record amount of equity. Morgan.
Diana Olick, thank you. Mortgage rates are down, realtors say traffic is up, so demand is high. But will people buy? There's still a shortage of homes on the market, especially starter homes, and the economy seems to be sending some mixed signals. But here to help sort things out is the chief economist at Moody's Analytics, Mark Zandi. Mark, great to have you on.
Thank you.
So as we see these rates move lower, is this a tailwind for housing?
Sure, yeah. I mean, 3.5% fixed mortgage rate's pretty attractive in the grand scheme of things, and I think home buyers have been very sensitive to the moves in mortgage rates. So anything around 3.5%, I think, will get buyers out. You did point out an important point, though. While there's demand, there isn't a whole lot of supply. The amount of inventory out there for sale is at very low levels, near record low levels. And new housing construction is also improving, but still very low by any historical standard. So even if people want to buy homes, they may not be able to find it. So that's a governor on sales, a constraint on sales, despite the low mortgage rates.
Yeah, and certainly that supply shortage is something we've been following very closely. I wonder, though, with rates as low as they are, with commodity prices, for example, coming off as well, is this going to be enough to spur builders to create more supply, more houses?
I think they'd like to. The economics are right for them to build more, particularly at the lower price points, the mid-price points, workforce housing. I mean, there's too much supply at the high end, but a real severe shortage at the lower and middle price points. So the economics work. The problem they're having is the zoning, the permitting, getting construction workers because of the tight labor market. They just can't get all the pieces together to build those homes, at least not as fast as the demand is there for them. So I think they'll get it together, and we'll see more housing construction. But it's a slow build, so to speak, because of those constraints.
Mark, let me broaden out the conversation to the economy at large in the United States. Are you concerned at all that it is slowing and has kind of hit sort of stall levels at 2%? Or is that just what we should expect?
Well, Tyler, 2% is the economy's potential rate of growth. So if we stay there, we're going to create enough jobs to maintain the current low unemployment, and life should be good, and expansion will continue on. But as you point out, if anything kind of goes off script and growth slows even a little bit, we get down into the 1.5% range on GDP, then unemployment will start to notch higher. And as soon as that happens, recession dynamics begin to take hold. And of course, there's a lot of things out there, as we're seeing today, that could send things off script, that could derail things. So, yeah, I think recession risks they're lower than they were. End of last year, the threat of the president escalating the trade war was a real risk to recession this year. That's off the table. But I think recession risks are still quite high, uncomfortably high, because we are traveling at a rate of growth that's just around potential, a little slower, and we'll have a problem.
So what's off script? Is coronavirus concerns off script? 737 MAX production halt off script? What would constitute a derailing of that 2% growth rate?
The 737 MAX doesn't help, but that's a one-time hit, and hopefully that comes back online sometime later in the year. And we understand that. We have a pretty good grip on it. I don't think that scares anyone too much. It's not great. It's a negative, but I don't think that's the thing. Coronavirus, that qualifies. I mean, because we can't handicap it. It's just very difficult to put a number on it, and you can construct some pretty dark scenarios. And even though you attach a very low probability to those scenarios, that's a problem. And that's obviously what the stock market's discounting today. And adding to that nervousness is the fact that valuations in the equity market are very, very high. I mean, about as high as they've ever been, except for around Y2K and the dot-com bubble. Now, they should be high because rates are low, but they are stretched, and the market is discounting nothing but good news, and coronavirus is certainly not that. So, yeah, that would qualify, and we need to watch that very carefully.
As bond yields on the 10-year come down, Mark, how much attention do you as an economist pay to the so-called yield curve and whether it is inverted or positive?
I pay attention. There's good arguments why the yield curve may be overstating the case. I mean, historically, whenever the 10-year yield falls below the 3-month bill yield on a consistent basis, and it did that last year, you get a recession roughly a year later. It's pretty foolproof. That may not happen this go around just because of idiosyncratic things that are going on, the global quantitative easing and the demographic demand for long-term bonds. So it probably overstates the case, but it's making a case. And the case is growth will remain slow right around that 2% level. And again, I think I haven't looked today, but I'm guessing you know this probably. The curve probably is inverted today.
It's a little bit negative right now, just by a little bit. So here's one cheer for an overstated case, I guess.
Yeah, right.
Mark, thanks a lot. Appreciate it.
Sure thing.
You bet. Amazon shares bucking the downtrend today, up more than 8% after reporting results. And the stock rejoining Apple, Google, Microsoft in the $1 trillion club. Which of these tech trillionaires is the best buy right now? Plus, the coronavirus sparking fears about the global economy, as we've been speaking about, and sending oil into a bear market. Oil's bad week almost over. We'll have the closing numbers coming up.
New York State is taking business to the next level, supporting innovative companies that will shape tomorrow, and building workforce development and tuition-free college programs to generate the talent companies need. With a $150 billion investment in state-of-the-art modern infrastructure and a nation-leading commitment to low-cost clean energy, New York is doing more than any other state to build for the future of your business. New York State, the state of the future. Learn more at esd.ny.gov.
With TD Ameritrade, you've got courses, tools, and help from pros.
It's almost like you're training me to become an even smarter, stronger investor.
Exactly.
Huh.
Left trade, right trade. Come on, another trade. I want to see it.
80s style training montage?
Yeah.
Happens all the time.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commission.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We are not a discount brokerage. These are top local agents that'll get you the best results.
Imagine traveling hassle-free with your golf clubs. Now you can with ShipSticks.com. No more lugging your clubs through the airport at risk having your clubs lost or damaged by the airlines. Sending your own clubs ahead with ShipSticks.com makes it fast and easy to get to your golf destination. With just a few clicks or a phone call, we'll pick up and deliver your clubs on time, guaranteed, for as low as $39.99. ShipSticks.com saves you time and money. Make it simple. Make it ShipSticks.
Tomorrow is just waiting to be created, to be reinvented and redefined. And it's those who dare to push the world forward, discover and reshape markets, and embrace the possibilities of data that will reimagine our potential and transform society as we know it. With new ideas and new technology, Get there with NASDAQ.
The quarterback is the field general. He commands the offense. Who are Wall Street's quarterbacks? In this market, it's got to be the software industry, which has been responsible for a tremendous portion of our overall gains for the past decade. Watch or listen live on the CNBC app.
Welcome back to Power Lunch. Seema Modi here. Amazon topping $1 trillion in market cap for the first time since September of 2018 following strong earnings. The stock joining Microsoft, Apple, and Alphabet in the exclusive $1 trillion tech club. Amazon, the only positive one of the group today. Let's bring in your Trading Nation team. Bill Baruch of Blue Line Capital, Daniel Shea of Simpler Trading. Daniel, which stock stands out to you?
I personally love Microsoft. I think it's one of the best long-term investments out there. There's a variety of reasons. You have CEO Satya Nadella that has basically changed the landscape of the company, right? Microsoft is now a cloud computing powerhouse. They got the Jedi contract from the DoD last year. That was a huge win, especially over Amazon. And they've shown consistent quarter-over-quarter and year-over-year growth, which is something that a couple of the other companies, we've seen a lot more volatility. So for me, I have to pick Microsoft.
Bill, you're tracking the technicals. What do you think?
On a technical basis, I'm leaning on Microsoft as well. And it's hard to choose from these bellwethers, but I use the process of elimination. Apple has hit my 324 upside target. Amazon, 2,000 is too fresh. I want to see some consistent closes above 2,000. For Alphabet, 1370 is the next real support level I see, about 4.5% away. But for Microsoft, we have strong support about 1.5% away at 168. It's a breakout level. I think there's good support there. And then below there, you have great support at 4.5% away at 163, a trend line coming up. So I'm leaning on Microsoft as a buy here.
Microsoft it is. Bill and Danielle, thank you for joining us. And for more Trading Nation, head to our website or follow us on Twitter at Trading Nation. Morgan, back to you.
Seema, thank you. Ahead on Power Lunch, we'll continue to monitor the sell-off as the Dow sinks more than 500 points. We're now down almost 600 points on growing outbreak concerns. Plus, energy stocks under pressure. The XLE Energy ETF having its worst month since May. We'll discuss when Power Lunch returns.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
In determining your entry points with rising stocks, look to buy pullbacks at support levels, such as uptrend lines, prior lows, Fibonacci retracement levels, or moving averages. I'm Lee Bohl, and Schwab is the better place for traders.
Okay. Bounced the trade idea off my firm. Same old lines. I mean, show me some technical indicators, proprietary research, something.
That's why I like Schwab. They help look out for your blind spots.
Come on, Johnny, you got this, buddy.
Speaking of blind spots,
It's time to trade up. Schwab helps you see the full picture with powerful intel and trading specialists who get it. Plus, get commission-free online stock, ETF, and options trades. Schwab, the better place for traders.
Make fitness routine with Pure Protein.
High protein, low sugar, tastes great.
High protein, low sugar, so good.
High protein, low sugar, birthday cake.
And try Pure Protein delicious protein shakes.
Consistency can deliver on investment goals. Columbia Threadneedle Investments.
Yacht is 24/7 action, from handling the guests or handling this.
Do you think it's funny that I'm still breastfed by my mother?
The new series Below Deck Sailing Yacht premieres Monday night at 9.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for. and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL Scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL, every journey matters.
TuneIn is your ticket to on-the-glass NHL action. With the NHL on TuneIn, listen to every one-timer, hear every stick save, and experience every goal for every team across the league.
Featuring home and away feeds for all 31 teams.
TuneIn brings the excitement of the NHL home to you all season long. Plus, with NHL On Demand, skate back in time and relive the best moments of the season while listening to past games in their entirety. Listen to the NHL on TuneIn.
Search NHL today.
Welcome back, everybody. I'm Sue Herrera. Here's your CNBC News update at this hour. Authorities say officers fired shots at a vehicle that breached security at President Trump's Mar-a-Lago resort in Palm Beach. 2 people from that vehicle were taken into custody. There was no word on any injuries. The president is scheduled to arrive there later today. Defense Secretary Mark Esper holding a news conference with his Italian counterpart at the Pentagon. He made a case for giving U.S. military commanders the latitude to use landmines as a means to protect American forces.
The landmine policy that we will be rolling out was developed during Secretary Mattis's tenure. Again, I think landmines are an important tool that our forces need to have available to them in order to ensure mission success.
And while all the attention has been on the coronavirus outbreak, new data shows that the flu still remains a bigger threat in the U.S. The CDC says the flu is now widespread in every state except Hawaii. There have been 19 million cases, more than 180,000 hospitalizations, and at least 10,000 deaths. That is the news update this hour. Guys, I'll send it back to you, Ty.
All right, Sue, thank you very much. It is a sell-off across the board. The Dow down more than 550 points, as you see right there. Let me take a look. What is it down? 528 right now, down nearly 2%. Both the Dow and S&P 500 on track for their worst month since August. January began so beautifully, but not so much anymore. Take a look at the Russell. It is down off its 52-week high, as you see right there.
It is time now for the power movers. IBM is up almost 5% today, bucking the trend after the company announced that CEO Ginny Rometty will step down in April. Stock has lost around 1/5 of its value during her tenure. Truck maker Navistar is soaring over 50% after Volkswagen's made a $2.9 billion bid to acquire the rest of the company. It's on pace to have its best day ever. It's up 52% right now. WWE, meantime, getting body slammed after Loop Capital downgraded the stock to a hold. The firm has lost its confidence in the entertainment company after it missed its 2019 guidance. WWE is on pace to have its worst day since 2014.
Well, the coronavirus that is hitting stocks is also taking a bite out of oil in bear market territory now. Let's go to Dominic Chu at the CNBC Commodity Desk. Hi, Dom.
All right, so Tyler, Morgan, oil prices are lower on the day, as you pointed out, and it's the coronavirus fears again. Will it put a damper or not on China, but world economic growth as well? So those U.S. benchmark crude prices, you can see they're $51.74 off their worst levels of the day, off by about 0.75%. ICE Brent crude futures, the world benchmark gauge, down by about 0.2%, $58.19. Now, it's a reversal. Both prices were actually in positive territory at one point earlier in the day. Now, there's a sense that some traders may not want to be exposed to owning things like oil or stocks ahead of a possible coronavirus update this weekend. Earlier this afternoon, the Baker Hughes weekly report showed the number of active oil rigs in America fell by 1 to 675 rigs. Traders will be looking towards the open of Chinese markets after being closed for the Lunar New Year holiday over the past week. So Morgan Oil, a big focus, still down. Back over to you.
Dom Chu, thank you. Energy stocks getting crushed today. Worst performing sector in the S&P, down more than 3%. If you take a look at the ETF that tracks gas and oil exploration stocks, the XOP, it's having its worst month since 2011. So how much lower can energy go? Well, with us now is Halima Croft, Global Head of Commodity Strategy at RBC, and Pavel Molchanov, Senior Analyst at Raymond James. Good afternoon to you both. Halima, I'm going to start with you. The cratering of crude prices has been swift and dramatic, to say the least, on the heels of this coronavirus concerns. I would imagine OPEC and other major producers are watching this very closely.
No, and we're getting reports that they are considering having an emergency OPEC meeting. The Algerian oil minister, the president of OPEC, was out earlier this week talking about a February meeting. The Russian oil minister was out today signaling that they would be prepared to meet in February. It's our understanding an emergency meeting could be held as early as next week. So it'll be very, very important for the producer organization. If you are going to move up an OPEC meeting to next week or in the next couple of weeks, how do you manage this? Because there's so many moving parts, because it's unclear what the real impact will be on jet fuel demand. You have a Libyan outage. Like, how do you target sentiment in this type of environment? But clearly they are very concerned. They want to be proactive and get ahead of this. That's why we're hearing all the discussion about an emergency OPEC meeting.
What you're telling us right now is a new and developing a new and breaking, I should say, development right now, the fact that OPEC could potentially be meeting next week.
Well, that's what we're hearing. Again, we had heard, sometime in February floated, and now we're hearing potentially they could even move it up to next week. Again, this is something that is happening very quickly. I think a country like Saudi Arabia and their leadership of OPEC wants to show they are getting ahead of this. The Saudi oil minister had indicated they'd be proactive on this issue. So I believe that they want to not let this go too long without making some type of statement about their willingness to act.
Pavel, if there is a meeting next week, an emergency meeting, isn't that tantamount to saying they're going to do a production cut?
Very likely. Saudi Arabia is already very disciplined with its output. It's been that way before the Aramco IPO last December, and they've continued to be disciplined. So there is room for them to cut even more if they choose to. But, as the other guest mentioned, Libya just shut down an 800,000 barrel a day pipeline. That in and of itself can easily compensate for the demand impact of the virus outbreak, but nobody seems to care. This is the classic one-hand clapping approach, right? Sentiment is so negative that the market fixates on the demand headlines, ignores the bullish things happening on the supply side, whether it's the U.S. rig count continuing to fall, Iran, continuing to be an issue, Venezuela, not to mention the Libyan disruption.
Yeah, I could not agree more. I mean, we've had Libyan production basically off the market for now close to 2 weeks.
So there is a production cut.
There's a huge production cut going on right now. I mean, we're talking about 1 million barrels of Libyan production off the market. Libya is looking like it's going into a full-scale war situation. You have oil executives talking about Libya becoming a serious situation. That is not an environment to get this oil back quickly. When Libya went off initially, people were saying, oh, it's a negotiating tactic. This is not a negotiating tactic. General Haftar wants to win. And so this is a sort of starve out the central government. So I think this oil could be off for a significant period of time. But again, the market is entirely focused on the sum of all fears on demand.
Yeah, Pavel, I wonder what you think all of this means for energy stocks, especially in a day where you have Exxon and Chevron both posting disappointing earnings and both of those stocks weighing on the Dow.
Exxon, I'm continuing to be negative on individually because of its chemical business. You're right, both of those guys missed, but Exxon's chemical segment is such a structural headwind. This segment posted its worst results in more than a decade, even during the global financial crisis. The chemical business was not losing money. A lot of people don't appreciate the fact that Exxon is the third largest chemical company in the world. When they're losing money in chemicals, this is a big deal in contrast to, the other multinational big oil. So that one I would avoid, but there are plenty of oil stocks that, we continue to like precisely because we think that the commodity is oversold, whether it's the, Saudi, an additional cut, or eventually, of course, the virus will subside. Ultimately, oil needs to be back in the 70s to rebalance the global supply-demand equation.
Going back to the point you just made, Halima, about sum of all fears right now. I mean, when you have Delta, American, United, all cutting flights, in and out of China right now, you're seeing it on the freight side as well, basically this holdup. How much could that actually dent, at least in the near term, crude and fuel demand? And is this something that we've seen play out in the past with SARS, for example?
I mean, I think if you want to look at Chinese jet fuel demand, that has been a bright spot of Chinese demand. That's 850,000 barrels a day. If we wipe out all of that and we still have a Libyan outage, we are in a deficit situation. But again, then we have to think about the broader picture in terms of the market. We know that jet fuel prices in Asia are crashing. And so we just have to see, again, how long does this virus go on? When does it peak? Are we talking about something that is a multi-month situation, or we get indications in the next few weeks that it peaks? Like we heard that, for example, workers in Shanghai have been told to go back to work on February 9th. If that is not the case, I think that will lead to a lot more concerns about the trajectory of this virus.
Pavel, what does all this mean for oil and gas here in the U.S.? I mean, we've continued to see the rig counts come down. We know there's been pain in the oil patch here. Does all of this actually help to buoy U.S. producers, or is that just not the case when crude continues to fall?
Well, as you mentioned, the U.S. rig count is at multi-year lows. It's been down pretty drastically since the really last summer. At the current rig count level, the U.S. oil industry cannot grow. It's just not possible. It's going to be best case scenario, flatlining kind of here on out. Could even decline. So for the U.S. industry to grow, there has to be a stimulus, a catalyst, and that can only be in the form of higher commodity prices. So if U.S. oil production is not growing, again, as is likely to be the case in 2020, the structural supply-demand balance globally is going to be fundamentally undersupplied. So again, we get back to the simple math. Unless oil prices recover from current levels, there will be a structural shortage of the commodity for many years to come.
All right. And what has been a big week for crude prices, we thank you both for breaking this down for us, Halima Croft and Pavel Molchanov.
All right, thanks, guys. Treasury yields getting crushed this month. Rick Santelli tracking the action at the CME. Hi, Rick.
I like the way you think, Tyler. This month, meaning year to date, that's a good place to start. Let's look at a year to date of 2-year notes. It has not been a good year, unless you're long, of course, looking for lower rates. Down 23 basis points on the year. Moved to 10s, down 39 basis points on the year. There's your curve flattening we've been talking about. And it isn't only the Treasury curve. We know 3 months and 10-year looks to have its first official weekly close. Inverted territory, meaning under zero since October of last year. Look at a 6-month chart of Barclays high yield spreads. This has moved from under 350 to over 400. So you see the amount of agita picking up. Now, granted, by historic terms, that's not bad, but it's certainly a lot more aggressive than it was just several weeks ago. And finally, if we look at what's going on with the euro versus the dollar, the euro's having a big day and a pretty big week, well above 110. What's going on? Many traders are thinking if Bernie continues to rise, they're looking for the Iowa caucus next week, that they do not want to hold dollars. So where are they going? To the ultra low volatility euro currency. So the dollar's down on the week about 3/8 of a cent, almost a half a cent. And all those losses are coming because we're shifting those longs to the euro currency. Morgan, back to you.
Rick Santelli, thank you. Stocks sharply lower across the board right now. The Dow and the S&P 500 are now lower for the year. The airline's getting hit particularly hard in the sell-off as they have had to cancel flights to and from China. United having its worst month, in 4 years. We've got much more on the airlines and the broader markets that's coming up.
The Bond Report is sponsored by PIMCO.
1 in 5 Americans have left a job due to toxic work culture. SHRM research shows almost half of the workforce has been treated unfairly due to age. People with disabilities are twice as likely to be unemployed. Nearly 700,000 of the formerly incarcerated will remain unemployed for over a year, and more than 50% of veterans have trouble finding work. These individuals have been constrained for far too long. Tearing down biases at work is good for people and business. Together, let's create better workplaces and a better world.
Here's some good news. You can control your mortgage, as long as it's a Yorgage, the fixed-rate mortgage exclusively from Quicken Loans that conforms to your needs. With a Yorgage, you control your home loan term, anywhere from 8 to 30 years. That custom term can help you finish paying off your mortgage in a time frame that works best for you. And by taking years off the loan, you'll potentially save thousands of dollars in interest over the life of your mortgage. Right now could be a great time to take some positive financial steps with a cash-out refinance from Quicken Loans. You can use the cash from your home's equity to make some much-needed home improvements or reduce nagging credit card debt. A great way to take cash out is with our most popular loan, a Quicken Loans 30-year fixed-rate mortgage. Here's one more reason you'll want to work with us. We're #1 in the nation according to J.D. Power. To learn more about how you can leverage the value in your home, call us today or go to rocketmortgage.com.
Competing in today's business climate is challenging. Your customers expect speed and convenience. Tackle is a revolutionary new app that connects you with over 70,000 background check providers who are ready to help you make your company more productive. Businesses use Tackle for same-day installation of all types of products. The Tackle app also includes functionality for photo documentation. To find out how Tackle can make your business more efficient and profitable, visit tackle.com/partnerships.
Oh, hi, Samantha. You look more like a Heather. Do you ever get that? It's nice to finally meet you in person.
You're Pete Nokia?
Oh, the pic? That was actually a professional headshot? Oh.
I'm sure that's it. Yeah.
I think I lost a few pounds recently, too. I'm actually doing a juice cleanse. Wait, you don't...
With Geico, the savings keep on going, just like this sequel. 15 minutes could save you 15% or more on car insurance.
Options action. Strategies from the street's top traders. New opportunities to profit from the market's hottest trends. Options action. Today, 5:30 Eastern. CNBC. Sponsored by Thinkorswim by TD Ameritrade.
Welcome back to Power Lunch. A big sell-off on Wall Street as fears about the coronavirus continue. Transport's getting hit especially hard today, tracking for the worst week in more than a year, down 2.4% right now. Airlines leading the way lower as American, Delta, and United cancel all of their flights to China for at least 2 months. Phil LeBeau joining us now with more on those airline stocks. Phil.
And Morgan, we should clarify that the flight cancellations are to mainland China. So we're talking primarily Shanghai, Beijing, a few other cities. Flights between the U.S. and Hong Kong, at least with American and United, those continues. Now, here's the flight cancellations that were announced today. Americans, effective immediately through March 27th. Delta and United, it's going to take up to a week for them to wind down their flight operations, but by the 6th, they will have canceled them. When you look at the number of people who are flying in China, this says it all. This is the world's largest airline market in terms of the number of people who are flying. And there are 31 international airlines that have either cut or curtailed their flights in and out of China. That number is likely low. It's much higher than that, likely. The numbers keep jumping seemingly every hour. When you look at the stocks of the U.S. carriers that fly there, the real sell-off happened after January 17th. I mean, look at that huge drop-off, especially for United Airlines, down 17% since then. And that's really when the airports here started testing people, and you saw the coronavirus story accelerating. China Eastern also trades here in the U.S. Not surprising that it is seeing a huge sell-off as well. China Eastern, by the way, serves 16 U.S. cities. I've placed a call into the company, but have not found if they're curtailing their flights. I would be curious to see how many people are on those flights from here over to China.
Phil, how did they come up with the timetables? I mean, when I see halted flights all the way through April 30th, I mean, right. We don't know how this is going to develop.
Right, and they can move that up, Morgan. A lot of this has to do with scheduling crews and equipment. And you just can't move it around day to day. So they want to give themselves enough pad here to say, okay, how likely is it that corporations will have people saying, I want to go back to China, or I can go back to China for work, and therefore I've got to book a ticket? Are people likely to do that even if let's say Corona clears up next week? Miraculously, it's gone. Our company's going to send somebody back immediately? A few will, but a lot won't. They'll say, you know what, let's wait a little while. Let's have you go back in March or in April. And that's why the airlines, they're trying to give their best estimate in terms of where demand will be at that time.
Always giving us the good context. Phil LeBeau, thank you. We've got some developing details on the Senate impeachment trial, meanwhile, and Elon Moy is joining us from Washington with more. Elon.
Morgan, a source is telling me that Republican and Democratic leadership are negotiating a potential deal that would put a final vote in this trial on Wednesday. Now, under that proposal, it would allow for closing arguments to be made in the trial on Monday, floor speeches from senators to happen on Tuesday, and then the vote on the articles of impeachment themselves to happen on Wednesday. Now, I will caution that this is all still in flux. This is an idea from leadership, and senators still have to say whether or not they are on board with it. Now, here is what we know will happen today so far, which is House managers are wrapping up their case for calling more witnesses if they haven't done so already. After they're done, the White House will then have up to 2 hours to make its case for calling more witnesses. Then there will be a vote on those witnesses. We know it will fail because Lisa Murkowski of Alaska and Lamar Alexander of Tennessee, two key GOP votes, have said that they will not support that effort. But what party leadership is trying to do is figure out how to wrap things up after that. Guys, one Republican Senator, John Cornyn of Texas, said they need to find a way to land this plane. Back over to you.
This is a little bit of a change, or at least, Elon, what they seem to be talking about from what has been assumed was going to happen, and that was the failure of the vote today on witnesses sometime later today, and then a very quick move to dismiss or acquit the president. I want to get a sort of sense about how did this come about, who does it help, and right in the middle of this, if I'm not remembering incorrectly, is the State of the Union address. Is it possible that the President of the United States is going to go to the House of Representatives next Tuesday night or Wednesday night while a trial is still going on and give a speech on the State of the Union?
Well, Tyler, that does seem to be on the table under the timeline that is currently being floated. Both sides would win some and lose some, right? So Democrats are facing the Iowa caucus on Monday night. That would mean that those senators would have to be here for the trial and to make their floor speeches at least on Tuesday. Republicans would also face a hit because President Trump, as you said, would be still having this trial hang over him even as he gave his State of the Union address and would not see that final acquittal until Wednesday. So perhaps if both sides lose, both sides can win here. But this is part of what is being negotiated as we speak, and we'll just have to see how it all plays out.
Wow. All right, Elon, thank you very much. Interesting news there. Elon Moy in Washington. All the major indexes, meantime, are deep in the red as weak economic data and coronavirus fears permeate Wall Street. Let's break it all down with our traders. Joining us now is CNBC contributor Jim Urio, managing director at TJM Institutional, and Jonathan Corpinas, senior managing partner at Meridian Equity Partners. Gentlemen, good to have you both here. Jonathan, let me start with you. I wonder how much the market is looking ahead to the reopening of the Chinese markets on Monday local time, Sunday night our time, and are expressing a worry that there could be a real major sell-off there in the double-digit area. That's just my number, not anything I've seen anywhere, and that would certainly reverberate back to the U.S. So you don't want to go into the weekend long.
Exactly, Tyler, and that's the message that we're seeing and that we've seen all along. While this has all unplayed, the Chinese market, that has been closed, right? So we've been trading our markets and waiting to see how the markets are going to react, both U.S. and internationally. We saw this activity last Friday. The risk-off trade went on, and it went on very fast. We're seeing it again today. No one wants to be long this market going into the weekend, especially with China opening next week. All indications are going to show us that there is going to be significant pressure on those markets, and rightfully so. They haven't had their opportunity. The news cycle continues to be one way. The news is all negative. We haven't had any real positive headlines relating to this just yet, and until we get that, the selling is going to continue. So this has been, this has been pent up for a long time, and we're going to start seeing that market hit Sunday night.
Jim, put this into context for us. I don't mean to minimize it. 556 points is 556 points. It's almost 2% decline in the Dow. But that's not cataclysmic.
Not even close to cataclysmic. It's just, to me, you can say that in a month and a half, we may look back at this and go, well, that's kind of the correction we need. And I actually think that's what's going to happen. I think we take it down to about the 3,100 level in the S&P, which will amount to about a 7 or 8% correction. What we're seeing today and last Friday is the Friday multiplier. You mentioned the Chinese stock market opened up. That's fine. But when you look at the weekend in 2 days where you don't have market access and you ask yourself, what's the likelihood of a negative headline versus a positive one? And it's overwhelmingly disproportionate to negative. I mean, we're still in the early stages of this. The earliest we could start to hear good news would be in a couple weeks when the people who've been contaminated now start to see it. But there's one thing I'd like to point out is that there's the health risk that's obviously grave and huge. But we're talking about the market risk, and that's about fear
and perception and consumers' behavior. If they start, like if you were scheduled to go on a cruise ship this week, I know if it was me, and I'm not trying to cause scare, but I would have some trepidation about doing that. I think people feel the same way about going to crowded restaurants and bars, and I think it's at the infant stage of it now, but that could be a big deal, and it could be an economic, a huge economic lockup.
Jim, I realize...
And Tyler... Sorry, just to follow up on Jim's initial point, this market, this pullback that we're seeing now, 2%, is probably going to be insignificant. Go back to December 2018. We were expecting a Santa Claus rally. Markets sold off after rallying the prior months leading into that. And January, too. If you look at the 2019 chart, December and January from 18 into 19 traded down, and then we went straight up. So this just might be our, beginning of the year, flushing things out. We're essentially flat to where we ended the year in 2019.
Yeah, to that point, Jim, I realize the coronavirus angst is playing out in markets the world over right now, but how much of this is also the fact that we've had disappointing earnings, and in some cases not even earnings, but outlooks coming into 2020. You've had softer than expected data, and then of course you do have all of this uncertainty in D.C. amid impeachment, Iowa caucus, etc.
I think the earnings thing is mixed, because if you look at both Apple and Amazon, they did quite well, and they're kind of the bell cow of earnings season. Tech week is, in my mind, is like 40%. So if I have to give what's the coronavirus part of it, I'd say of the fundamental part of it, 90%. But the other part, you remember when this kind of thing happens at Market Eye, for the month before the end of the year, I talked to scores of people, and they're like, well, what do we do now? I said, you rebalance. When you've had a huge year, you rebalance. Well, nobody rebalances until markets begin to correct. And that's kind of the life of a correction. At first you get the big pullback down, you try to make it higher, and then people are like, wow, I got too much risk on. And that's not just on the personal level, that can be on the hedge fund level too. So I think that's the second stage of a correction comes now. And that's predicated on a bad close today, because I think the market's held up relatively well considering what the story could be.
All right, gentlemen, thank you very much. Jim, Jonathan, have a great weekend.
Thank you. You too. Thanks.
We got much more in the markets coming up. And don't forget, you can always watch or listen to us live on the go on the CNBC app. We'll be right back.
Catch the Market Zone today and every weekday on Closing Bell, sponsored by E-Trade.
You should be mad at leaf blowers. You should be mad your neighbor always wants to hang out. And you should be mad your smart fridge is unnecessarily complicated. Making ice. But you're not mad because you have E-Trade, which isn't complicated. Their tools make trading quicker and simpler so you can take on the markets with confidence. Don't get mad. Get E-Trade and start trading commission-free today.
Ship Skis presents Ski Moguls.
Welcome to beautiful Telluride. Hi, I'm Brenda Buglione, former U.S. ski team racer. Here's some tips for skiing more efficiently so you can enjoy every minute of your vacation. First of all, you want to stay balanced and in the athletic position. Flex your ankles, knees, hips, hands in front, and look ahead. This will allow you to pressure the front of the ski while making a turn. If you get in the back seat, this will make your legs get tired very quickly. If this is the slope and this is you want to stay perpendicular. So when the slope gets steeper, you got to come forward. These tips will help you ski more efficiently. Let your boots and skis do the work, not your muscles. I can't wait to see you charging down all the big mountain terrain at Telluride Ski Resort.
Presented by Ship Skis. For more, go to cnbc.com/skimoguls.
Whether you've enjoyed the legendary terrain in Telluride, the unparalleled landscape of Park City, or the famed peaks of Whistler, you face the hassle of lugging your gear through the airport. With Ship Skis, you're just a few clicks away from having your skis, snowboard, and luggage shipped from your doorstep to your destination. With unrivaled pricing, real-time tracking, Ship Skis delivers hassle-free. Ship ahead and go catch those first tracks on fresh snow. Ship Skis, your skis delivered.
How well does your financial advisor know you? If they saw you on the street, would your advisor recognize you? At Ameriprise, we see you as more than a client. That's why our advisors care about what's important to you. They offer personalized advice to help you prepare for what's expected and even what's not, giving you the freedom to live financially confident. Because to us, you're more than just another face in the crowd. With the right financial advisor, life can be brilliant. Ameriprise Financial.
right, amid today's sell-off, well, we're less than an hour away from crowning our 2019 stock draft champion. Tight race, but Mets pitcher Noah Syndergaard just a few pitches away from clinching the championship. We will announce the final results and speak to the winner on Monday at 2 p.m. Eastern Time, right here on Power Lunch. Amazon, Tesla, the reasons why he's number one.
And two names that have held up very strongly in this market, despite the fact that you have both the Dow and the S&P on pace for their worst weeks in 6 months.
I can't believe January's over.
I know, right?
Yeah, nice having you here.
It's great to be here.
Good.
Thanks. All right, thanks for watching Power Lunch.
Closing bell right now.
Welcome to the closing bell, everyone. I'm Wilfred Frost here at the New York Stock Exchange. We have a big sell-off on our hands. At the lows of the day, it was down 600 points or 2% on the Dow. As we stand with 59 minutes left, we are down 543 points.
Welcome, everyone. I'm Sarah Eisen. Let's look at what is driving the action right now. Fears of the coronavirus hitting stocks as American, Delta, and United all suspend flights between the U.S. and China. Weak data this morning as the Chicago PMI number plunges. The Dow and S&P now negative for the month of January. And the big story bucking the trend today is Amazon looking to close up the day about 10% higher after a blowout quarter. We will be all over the sell-off for you through the close. Global investor Mark Mobius will give us his take. He is today's closing bell closer. Joining us for the entire final hour of trade, Barbara Duran is here from BDA Capital Partners. What do you do on a day like today, Barbara?
Well, basically, I'm sitting and watching because, in my view, the secular bull market is very much intact, but everybody was waiting for some kind of correction. We didn't know what the trigger would be. Problem is with this virus, we don't know how long and deep it will be, but it always represents a buying opportunity. The question is when. Is it today? Is it Monday, Tuesday? Do we wait a few weeks?
Not today for you.
It's not today for me because I think there could be a little bit of follow through because, again, we're just starting to see new cases arrive in the UK and elsewhere, and it could get a lot deeper. And so we're going to have a fear factor, but somewhere in here, there's going to be a great buying opportunity for one's favorite stocks and in the leisure and lodging and airlines. So some things are happening nicely.
Certainly a risk-off move across the board. 10-year Treasury note down to 151 as we stand. A significant move from where we started the week at 168. We are all over this big market sell-off. For you, Seema Modi has the biggest movers here at the exchange. Mike Santoli has his market dashboard looking at energy's big drop. Meg Terrell has the latest on the coronavirus outbreak. And one bright spot in the market today is Amazon. Josh Lipton has more on that extraordinary move higher. Seema, let's start with you.
Hey, Wilfred. Well, that note from Goldman Sachs is getting a lot of attention. Economists there estimating that the virus will lower China's GDP by 0.4%, which economists say will have a spillover effect on U.S. growth in the first quarter by a similar amount. Biggest laggers at this hour, it's really a mix: energy, technology, and industrials. Caterpillar guiding lower for 2020. The CEO, Jim Appleby, saying global economic uncertainty will persist. He expects dealers to further reduce inventories. And within construction, China sales are expected to come in flat to down 5%. That's being reflected in shares of Caterpillar, which are now down 11% so far this month. Sarah and Wilf, back to you. Seema, thank you. We'll send it over now to Mike Santoli looking at energy stocks in today's market dashboard. Mike.
Yes, really in liquidation mode in the energy sector. There's really been no defense provided by these value stocks, these high dividend payers, anything in oil. If you look at the XLE, the big energy sector ETF, it is actually now plumbing the lows from early 2016. So this is not just about a pullback from a high. This is really going all the way back to those lows. The exploration and production names, not quite as deep, but this really shows you that there's a give-up trade, even though a lot of people coming into the year were positioned in a way that suggested you could maybe make a contrarian call on these. Now, take a look at ExxonMobil. It reported earnings today. It's selling off following that. But this is the dividend yield of Exxon versus AT&T and IBM. And I name that. These are all three current or former Dow stocks. When the dividend yields are rising in this fashion, they're so far above the overall S&P yields of about 1.8%. It just shows you the market is saying, we don't know how safe these dividend streams are. We're not willing to take the risk of holding the stock just to collect them. So Exxon has now crossed above AT&T. Exxon, by the way, was not too long ago a AAA rated company. So it's quite jarring to see the yield go up there. People are basically saying energy is in runoff mode right now. As a matter of fact, another little factoid, it now yields 5.6%, somewhat more than junk bonds yield at the moment, guys.
Mike, I guess the only very slight positive is that oil prices are down more year to date than these stocks are by a tune of 5%, but you're talking double-digit decline still for both.
Yeah, it's all about where you start that comparison from, of course, because last year it was quite the opposite. So I do think, yes, perhaps it shows you that this is much more about, investors deciding to dump these laggards that have disappointed so much, as opposed to trying to handicap exactly where energy prices are going. But to me, it still shows you that this section of the market is still not indicating anything in the way of a reflation of the global economy at the moment.
All right, Mike, thank you. Any opportunity in the energy stocks with the steep sell-off? You heard Mike say the dividend yield now higher than junk bond.
I don't buy on dividend yields because you can lose more and the stock goes down. And I think oil prices, strengthened in the fall, and I think that was on assumption that demand was recovering with global reflation. But that's now been delayed because of the virus. Because I think people expected world GDP to start recovering or bottom this quarter. That's pushed off for another quarter or two, depending on how long this lasts. But no, I would not be shopping in the oil area at this point.
Crude is down about 5% this week, 15% for January. Turning now to the coronavirus outbreak. The latest numbers show 9,922 cases worldwide and 213 deaths. The State Department issuing a do not travel advisory for China, its highest possible warning, adding that Americans currently in China should consider leaving. Let's bring in Meg Terrell with the latest for us. Meg.
Hey, well, full amid all of these developments, drug companies are hard at work on potential medicines to treat the novel coronavirus. We visited the labs of biotech giant Regeneron yesterday, which says it may be able to have an antibody approach ready for human testing within 6 months. And based on work the company's already done in SARS and MERS, which are other coronaviruses, they've identified an approach to blocking the activation of those viruses, which they say could be available for human testing even sooner, guys.
Meg, thank you. Meantime, one bright spot amid the sell-off today is Amazon. That stock hitting record highs after reporting earnings yesterday. Let's get over to Josh Lipton with more. Josh.
So, Sarah, Amazon shooting higher here, topping that $1 trillion mark. The stock having its best day since December 26, 2018, on track for its best week since November 2018. Analysts like what they saw in that report, calling out broad-based strength, which much of the attention on AWS, the cloud business, reporting at $10 billion in sales, jumping 34%. Operating income for that unit rising 19% to $2.6 billion. Amazon's CFO calling out the unit's strengths and the competition.
We feel that our product set it leads the market, and we add to it at a quicker pace than our competition. So actually the gap on capacity and features is growing as we speak.
Now, of course, that competition is also impressing investors. Microsoft reporting and beating this week, too, with Azure, its cloud business surging 62%. Guys, back to you.
Josh, thanks so much for that. Clearly a massive move. Not quite as much as it was this time last night, now up only 8%. Bob, where do you stand on this stock, and how do you think about its valuation?
Well, Amazon, to me, is one you hold for the ages. I own it in all my accounts. I own it myself. And I think right here, traders may say, well, do we take a few profits here? But I would hold it. They have so much more to go. I mean, the stock had not gone back to its old high, even though it started to recover in the fall. People were concerned about AWS because the last quarter, they were concerned about all this spending. But what I think we've seen, they really have hit escape velocity. They can spend quite a lot on new initiatives, and they're still going to be profitable. So this company is, they have a long way to go. So you could even buy it here.
You like it the best out of all the $1 trillion stocks?
I know. Well,
Microsoft, Amazon, Google now.
Well, I own Microsoft, I own Apple, and I own all of them. But, Amazon, to me, Jeff Bezos is just brilliant, and they just keep pumping it out. So that would be my number one pick if I had to pick.
Amazon, of course, such a big stock, such a big move means that one of the 11 sectors on the S&P is higher today. Consumer discretionary. In fact, up a full % because of the Amazon effect, whereas every other sector is down more than 1%, with a handful down more than 2%, and energy down more than 3%. Checking in on the Dow, we've just taken a fractional leg lower again, 577 points now. The low of the day was 597, but essentially, as you see there, 2% of declines. The Russell down about 2%, the S&P down 1.7%, the Nasdaq down 1.5%. We've got 51 minutes left of this session, and we will, of course, be right in there on the markets throughout amid this big sell-off. Still ahead, airline stocks getting crushed as coronavirus fears spread and force carriers to cancel flights to China. Up next, former Continental CEO Gordon Bethune will tell us how those cancellations will impact the industry's bottom line.
Plus, famed investor Mark Mobius is our closer today. Find out how he's putting money to work amid all of these virus fears, noted for his emerging markets take. Emerging markets got slammed this week. As we head to break, here's a check on our data tracker. January consumer sentiment did come in stronger than expected, but it was that Chicago PMI number showing manufacturing activity fell to the lowest level since December 2015. Really spooked the markets this morning. We'll be right back.
What makes Rémy Martin really different is the fact it's rooted in exception. I'm really proud of the team because we are all passionate. Everyone is part of every drops we have in the bottle.
When we gather, when we are together, excellence can happen.
The house of Rémy Martin, it's not standing still. It's being innovative and to be audacious in the way we will do it.
Technologie pourra nous apporter davantage, mais dans l'esprit de tradition qu'on a toujours voulu sauvegarder.
Having a celebration with a glass of Rémy Martin, it's also celebrating teamwork. When you are harmonious, the final result is well balanced.
In a glass of Rémy Martin, you have the essence of what we do here in Cognac, and you can share it wherever you might be.
At Fidelity, online U.S. stocks and ETFs are commission-free. And when you open a new brokerage account, your cash is automatically invested at a great rate. That's why Fidelity leads the industry in value, while our competition continues to talk.
I love the new MyWW program because it's tailored to you. Take the personal assessment and get matched with a proven weight loss plan. Find out which customized plan can make losing weight easier for you.
MyWW. Join for free and lose 10 pounds on us. Wondering which credit card is right for you? Introducing CNBC Select, the authority on all things credit cards. We do the research, you reap the rewards. Head on over to cnbc.com/select and take control of your money.
I got things I want to do, but student loans were holding me back. Credible.com helped me save $600 a month with a great rate. Now I can go do what I want to do.
Visit Credible.com to see how much you could save on your student loans.
We are KiwiCo, and we deliver hands-on STEM projects designed to inspire young innovators. Kids of all ages can explore science, engineering, art, and more. Get your first month free. Visit trykiwico.com.
I sent your new prescription to the pharmacy. Any idea how much it will cost? You have a choice. Insurance or GoodRx? I have insurance. Insurance is not what it used to be. People struggle to get their prescriptions covered, and prices keep rising. I recommend GoodRx. You get free coupons to save on your prescriptions. Compare prices to find the best discounts.
GoodRx. Smart.
Stop paying too much for your prescriptions. Download the free app today.
48 minutes left to go before the close, and we are now lows of the session. Dow down 587, down 590 just a second ago. This is the worst day for the Dow since October 2nd. It's the second week in a row of declines, and just today we've wiped out the gains for the month of January.
Only just though, which is worth pointing out.
No, it started off strong.
Given all the challenges that we face, whether that was in the Middle East with the coronavirus or other factors like earnings underwhelming, and the Nasdaq is still higher by 2% month to date as well.
Right, S&P 500 looks set to close at its lowest level since December 30th, so low of the year, but just back to the end of December. Dow lowest close since December 18th. Let's check in on some individual market movers for you. Shares of WWE are falling on news of a management transition there. Co-presidents George Berrios and Michelle Wilson are departing the company effective immediately and will no longer be serving on the board. The company says it has different views on how to achieve strategic priorities moving forward. The stock getting trounced, down 22%. One name sitting out the sell-off is Deckers. That stock jumping on an earnings beat. The retailer citing strong sales for its UGG brand, and the stock is up 8%. It's that kind of winter.
Let's have a look at airline stocks falling today after Delta, United and American Airlines all announced they would suspend US-China flights due to the outbreak of the coronavirus. Shares of Delta have plunged 10% since the CDC confirmed the first US case of coronavirus 10 days ago. United falling 16% and American 5%. Joining us now to break down what this means for the airline industry, Gordon Bethune, former chairman and CEO of Continental Airlines. Gordon, thanks so much for joining us. I guess first and foremost, what do you make of the severity of this virus as it relates to your former industry, having seen versions of this occur in the past?
Well, you never know. Of course, they really don't know what the severity of this virus is, although they're taking the precautions. And as you mentioned, the government decides they're not going to allow those people to fly into the country, so that ends service. United is going to be the biggest loser because they own more of that market. I think it's about 3.5% of their international revenues, so it's a pretty big chunk of change, and it's just going to have a revenue effect on the airlines and downstream business.
I just want to mention we're down more than 600 points, over 2% on the Dow with 45 minutes left of the session. Gordon, in terms of the timing of exactly when these airlines have made these announcements, particularly given the way that the pilots union did try and sue American to make sure they didn't have to fly there, what is the ultimate driver for the airlines to make this decision? Is it because demand has dropped off that they may as well do so? Or is it because they are really thinking first and foremost about the health of their staff?
Oh, I think it's all of that. And if you don't have anybody that wants to fly there, obviously you're going to not have anyone on the airplane. So they had already began to decrease service as the demand dropped. But there's a process, and every airline has its own deal with the pilots and the flight attendants, that they can drop those trips or trade them. And there's a reserve staff, and it's pretty high-value trips. So there are people who will take it if you don't want to. So there's a mechanism to accommodate those who are afraid of the consequences.
I'm wondering how these airlines are coming up with the dates for how long they're going to be out of service to China. We saw the Delta headline this morning all the way till April, and we were thinking, oh my God, April's so far away. Where do they come up with that?
Well, you're too young to remember Karnak, but I'm pretty sure it's about that same way. You just pull a number out of the air, and it kind of looks good.
Bob, where do you stand on these as investments? Clearly, you've got buying opportunities if this proves to be a temporary issue.
Right. Normally, I'd be all over this, but as I mentioned earlier, we don't know how deep this will go. And what you've been seeing is draconian measures taken by China. Everybody's erring on the side of caution. I think particularly after the Boeing example, you've got to react quickly and do what's best for the customer. And who knows, if we start to see a lot more cases in Europe or here, who knows what airlines will shut down different routes. That seems unlikely, but, these things, have a way of morphing beyond what we expect. So normally I'd be buying airlines today, but I think we need to wait a little bit.
How much of a hit do you expect this to be, Gordon, to their financials for the quarter?
Well, 3.5%, I don't know. It's a little over 3% at United of international revenue, so that's I'd have to go and look at their income statement, but it's a severe cut in revenue, which is going to be missed. Now, they can deploy these airplanes in other markets, but on a short-term basis, as this is, it's not a permanent fix. So the disruption is going to cost them money. It's not going to put them in the red, but it is going to deplete their earnings.
Gordon, we mentioned the share price moves since the CDC announcement. Does it make sense to you that United has performed the worst?
Well, United, I think, serves 5 different cities in China, unlike American and Delta that are very low presence. So they're a strong China player. So if China gets sick, United is going to be affected. United's got a strong route network around the world, but it does have a heavier concentration in China than American and, say, Delta.
Can they make up for the lost capacity by adding flights in other parts of the world or doing something different with pricing, something like that?
That's what they're going to try to do, and I would expect, because the airplane they're using is a long-range 787 mostly, or 777. So they can minimize the impact, but I don't think they can mitigate the whole consequence of losing that much of their revenue to a ban on flying to China. It's a pretty big deal.
Gordon, clearly oil prices have declined significantly. WTI is down about 15% during the month of January. If that is only proves to be a short-term decline in the oil prices. Does that fail to have much benefit to the airlines because of the way they hedge things? Does it need to be a more prolonged decline to really drop through to their bottom lines?
They're pricing tickets. They're selling Wilford about 90 days out. So if the oil prices decline further, they can adjust their pricing and pass some of that on to the passengers, maybe, and stimulate traffic. But I think that they're not hedging for these short-term issues. They're about 90 days out. That's what generally is the case.
Gordon, just quickly want to get your take on Boeing following their earnings, not so much the numbers necessarily, as the tone struck by Dave Calhoun, whether it was on the CNBC interview or on the earnings call. Do you feel like they've turned a corner now under Calhoun?
I think they've got to start, Wilford, that they're heading in the right direction. Bringing Mr. Calhoun was a good idea. Making Mr. Kellner, Mike's replacement at Continental as CEO, the chairman really kind of binds a regulatory and the customers to bring them in on board, and Calhoun is going to get this thing straightened out. So I would never bet against Boeing. Just wouldn't do it.
Gordon, thanks for joining us. Good to see you as always.
Thank you.
We briefly were down 615 points on the Dow. We're down now 590, so found a little bit of a bid once we hit that sub 600 mark low. Let's get to Mike, who's got his second installment of today's Stats Roll. Mike.
Yeah, well, no surprise to look at today's action, but when it comes to expectations for growth and risk-taking, investors globally are taking the under, and that process has been underway for a little while. This indicator is the Ned Davis risk-on, risk-off indicator. Essentially, it's a composite of many different measures of market prices and flows and sentiment indicators and all the rest that basically show whether we're in risk-on or risk-off mode, and also how long we've been there and how deeply. So obviously, this is before today. So I'm guessing after today's action, we're going to be down that way. Bond yields obviously plumbing recent lows. Now, don't worry about the percentages. It's sort of the percentage of the indicators either uptrending or downtrending. What I did want to point out, though, is these indications right here, when we spent some time in risk-off mode. This was May of last year, May into June of last year, and that, of course, August into September of last year. So it's not so much that we get much deeper and lower here, but usually you have to knock around in this zone of regathering risk appetites, making sure the coast is clear, seeing if we've overshot to the downside and all the rest. This was October, early October. That was about a 4% down move in the S&P 500. Didn't really last very long. So there's no real script as to how this goes, but it does tell you that it really has been this sort of global move, and obviously today is going to deepen that a little bit. Here's stocks versus bonds on a year-to-date basis, and just today we basically have bonds in the form of the Barclays aggregate, the Ag ETF, outperforming stocks on a year-to-date basis. As you mentioned earlier, the S&P is basically flat on the year. At today's lows, it was basically at the early January lows that happened after that Iran attack. So obviously, if you dial back 6 months, stocks are doing very well. They're riding high. This is a kind of a normal pullback, but it also shows you bonds, again, are doing their job in a portfolio because they're definitely providing some ballast for a lot of this turbulence, guys.
Yeah, I mean, 30-year yield right now, 199, lowest since September. 2-year yield now, session lows 132, September 2017 is the level we're looking at.
Yeah, and I'll point out again, S&P dividend yield, not that it's magic in terms of this relationship, but it's over 1.8%. So now you're talking about not being very far even from the 30-year Treasury yield.
Mike, thanks so much. The only other thing I point out on the bond point, Sarah, is clearly most of it's risk-off fears around the coronavirus, but we got some pretty disappointing GDP data out of the Eurozone earlier today. It came in at 0.1%. It was expected to be higher than that. You actually had contraction out of Italy and France. The German 10-year has moved quite a lot this week as well, and whoever's leading who, either way, globally, yields have compressed this week.
Well,
and
it goes into the global slowdown.
Yeah, oh, absolutely.
Yeah, and also the Fed. I mean, the reaction there was buying bonds as well. It's all been bullish for bonds. The NASDAQ is down more than 1.5% right now. Let's get to Bertha Coombs with more on the movers. Bertha.
That's right, Sarah. If not for Amazon's strength today, we might be down even more. We're seeing really weakness here across the board as we move to the lows of the session, particularly in tech, but biotech also has been quite a bit of a loser All of the sectors are going to be down for the week, and chips in particular getting hit harder, giving up all of their gains for the month. Some of these big movers, Lam Research, which had hit it out of the park on its earnings earlier this week, getting hit hard and giving back today. A lot of this obviously has to do with that sense of concern about things shutting down, production shutting down in China, the whole impact on inventories that might happen as things are temporarily displaced because of the coronavirus. But overall, there's still some concern here. And we're also seeing this month as well a bit of a shift in terms of some of the laggards getting more love. Although today we are seeing software down with everything else. The IGV software index is actually one of the only tech sectors that is up for the month, nearly 7%. And so far this year, the stock that continues to power forward, and even today is higher, is Tesla. I would call this the stock of the week, up 14% for this week after those blockbuster numbers on its earnings and its outlook for production increasing, notwithstanding the fact that they too have a big tie to China. But also take a look at this 1 month chart there, up 50%. And guys, for the last 3 months, it's up 90%. This right now is the stock of the year. Back over to you.
Bertha, absolutely is. Very impressive that it's in positive territory given the selling today. Let's get to Seema, who's on the floor here at the stock exchange for more on what's driving the market lower here. Seema.
Hi, Wilfred. Well, a very different last hour of trade compared to yesterday, where we saw the market move off the lows of the session and actually end higher on the day. The Dow was down about 600 points. We're currently down 589. The biggest losers really have to do with those earnings reports from Caterpillar, Chevron, ExxonMobil. Unlike earlier this week where earnings really provided support to the market, earnings from those three multinationals weighing on investor sentiment. We started the day down by 225 points. Losses then accelerated once we got that PMI read in Chicago for the month of January. Peter Bookvar is saying that suggests that signing of the Phase 1 trade deal not really impacting business confidence thus far. You can see United Health also down over 3%. The sectors weighing the most so far today and for this month, energy and materials. So those two sectors obviously underperformed in 2019 as well. The oil producers, can't signal this enough, but not just down today with the move we're seeing in oil prices, but double-digit percentage decline for a lot of these major oil producers like Cabot and Noble Energy, which is already down 20% in the first 4 weeks of trade. Guys, currently we're looking at the Dow now down 606 points, now at the lows of the session. I'll send it back to you.
Yeah, down 2%. Seema, thank you. Let's take a look at some individual movers. Word on the street calls today, starting with Amazon. We counted 10 firms actually raising their price targets on this stock following the company's earnings beat. Stock one of the bright spots in today's sell-off, looking to close up almost 10%. JP Morgan initiating Uber with an overweight rating and a $51 price target, calling it a global leader in rideshare and meal delivery. The firm expects shares will be driven by stability from international markets and new loyalty product rollouts. They also see a path to profitability and an increasing focus from Uber management to that end.
And Needham out with a note on Snap saying it's taking brand ad spending share from Facebook. This comes after the firm met with the CEO of a social media ad agency who said 90% of his brand advertisers were on Snap, though both stocks, Snap and Facebook, trading lower in line with lots of stocks as well. Facebook's had a tough week though with its earnings. Bob, where do you stand on those social media stocks?
Well, the Snap news is interesting because I think it says more about Snap than it does about Facebook. Because Snap has been about the monetization story, is it going to work? And it seems to be working. I mean, the stock is probably fairly valued right now. But for Facebook, I don't think it matters that much. I mean, Snap has about 56 million users. Facebook has 2 billion. And in terms of the 18 to 24 age group, which is primarily what Snap does, Facebook has 14.5% of their users in that age group. Although about 3/4 of that age group do use Facebook. So I don't think it's a zero-sum game. I think it's something to monitor always, but the advertising digital pool dollars are still expanding. So I don't think it has deep implications for Facebook.
Now down,
but it is good for Snap.
12 points. Mike Santoli also here at the desk. Mike, I mean, the individual movers that are moving today and for the week, really outsized moves have to do with earnings. It's still earnings season. It's coronavirus. It's election uncertainty. It's global growth.
Yes.
But it is still earnings.
Excellent earnings still have the power to drag stocks higher, as we're seeing with Amazon today. Although I do think it's telling that today you are seeing some of the formerly bulletproof leaders like Apple give up more than the market. So there is a little more of a let's just reduce exposure here. There's so many things moving around today that you mentioned, Sarah. You know that what's going to happen on Monday is the Chinese market's going to open with a huge loss, right? So you're going to have that kind of catch down move in China. You're going to have the Iowa caucuses.
We should have already priced in the U.S.
Right. But I think if your question is, we're pulling back, is this the time I want to buy aggressively ahead of a weekend when what could possibly come out over the weekend about this virus that's all of a sudden going to make you feel better about it? So I'm not saying people are right. I'm saying that's how the psychology works once you've loosened the kind of the tether to the old highs. And I think that's basically what we have. We did bounce in the S&P a couple times. We're right around the year-to-date, the year-end close of last year and that early January low. So, you're starting to see a little bit of increasing fear and desperation in some of the indicators, but it's we're only down 3%, so you wouldn't expect to see any kind of capitulation yet.
Just hit session lows, by the way. We should mention 620 briefly on the Dow, down 2.15%.
We are just getting word that the White House will hold a briefing any minute now on the coronavirus. It will be members of the president's task force on the virus. It will include Secretary Alex Azar, Department of Health and Human Services, Robert O'Brien, Assistant to the President for National Security Affairs, Dr. Robert Redfield, Director of the Centers for Disease Control and Prevention. Waiting those gentlemen. We'll keep an eye on that podium. As we await that, we're keeping an eye on this market. Stock selling off hard on fears about coronavirus and the economy. The Dow right now down 630, so we're seeing fresh session lows. It's about 30 minutes to go before the close. Joining us by phone right now, Tony Dwyer, Chief Market Strategist at Canaccord Genuity. Tony, what's your level of uncertainty and bearishness around this market?
Well, it's funny, Sarah, that, people talk about what causes the market to peak or to, bottom, and it's always with certainty. It peaks when you're certain that the market, there's nothing that can drive it down, and it bottoms when you're certain there's nothing that can drive the market up, and we're somewhere in the middle right now. So we downgraded our view 2 weeks ago, and that was before the coronavirus. And it was because I really literally couldn't come up with a reason that the market should go down. Earnings were great, credit was great, but there was just this level of enthusiasm that was inappropriate, and we're definitely taking that out pretty quickly.
So clearly, Tony, as you just outlined, valuations anyway you felt were getting stretched. Does that mean, though, that given that the trigger for the selling was the coronavirus, that if and when that as an issue is cleared up, the market rallies again? Or do you think this has now triggered a wider sell-off that was due and would continue regardless of where the virus stands?
Well, Wolf, as you know, one of my favorite lines is corrections only appear natural, normal, and healthy until you're actually in one. And by definition, they're triggered by something that creates a perception of a fundamental change or weakness that can drive you into a recession. And definitely this coronavirus puts you in that framework. So what I went back and I looked at the Ebola virus pullback in October of 2014. And what we saw was a 9% drop in the S&P versus the current 3% drop. We looked at a VIX that was at 26 back then. It actually intraday got over 30 at the low. Less than 15% of the S&P was above their 50-day moving average versus 47% now. And only 35% of Investors Intelligence newsletter writers were bullish. So while we did expect a pullback in the 5 to 10% range, you're just not at rather than try and figure out what the right price to be a buyer is, it's where the indicators suggest that you're reflecting kind of a worst case scenario, and we're just not there yet.
Mike, Tony brought up a point that you've been making a long time, which is you got to keep it in perspective where we were in terms of sentiment and how the market had run up and everyone was feeling great about everything for the year, which makes you wonder, is the coronavirus an excuse or a cause of this sell-off?
I think something was going to come along. The coronavirus is a cause, but one that has real-world effects. So it's not purely in our heads that something came along. It is really, what it tells me is that, everyone thought we were going to get an immediate trade peace dividend in terms of industrial growth picking up, and the globe was going to look like a much healthier place economically than we thought last year. This is pushing that off indefinitely. We simply don't know when we're getting that upturn. everybody was positioned and prepared in their minds for that type of a market and that type of environment, we basically have gone 180 degrees the other direction now. That's all it really means. People are badly positioned for the world we now find ourselves in, and who knows how long it takes to kind of shake that out. The one thing I'll say is, Tony's right about not setting a level or a price. Sometimes if you've overshot to the upside, you might have to overshoot to the downside beyond what the fundamentals say you need to. I'm not saying we do, but 3%, there's nothing particularly special or catalytic about that level.
Tony, are you concerned about the GDP impact on China, and also factor in for us that weak Eurozone data for the fourth quarter on GDP? Does that all delay that point that Mike said of the hope of a global economic pickup?
Okay, so rather than yes is the answer, Will. It could have a major effect on global GDP because you have the world's second largest economy that's basically shut down, but it is very important. This is the most important point I can make. If you get too negative based upon what the impact of this could be to GDP, you could get your face ripped off by a massive monetary stimulus plan globally to offset it. It's the world's second largest economy, and you've got to know China's going to do some kind of fiscal stimulus to come out of it. So you got to be careful about getting too negative. The time to get cautious was when it was ramping into excess, not when it's getting hit in a significant way.
I think it's an important point, Tony, because, we sort of wonder what monetary authorities can do to fight weakness all over the globe. So is your point that in China, they can do a lot?
Clearly. So unless you're going to debase all the primary currencies, the idea that the Fed has run out of bullets or the global monetary policy has run out of bullets, I think to date has been proven inappropriate, because as long as you're a primary currency and can print money, you will when you need to. And if this becomes a real crisis, a real global shock that comes out of a macro event in China, which is again more than 17% of global GDP, you will see that. So you could be right. You could feel it's almost like the low in 2018, where I felt like an idiot because I was too bullish well before the actual low. But when you got that dovish pivot out of Powell, it ripped so high so quick that being defensive proved to be the wrong move. So we're actually looking to be more offensive as our indicators kick into the buy zone. They're just not quite there yet.
Tony, stay with us, if you would. The president's coronavirus task force expected to hold a briefing any moment in Washington. Let's bring in Meg Terrell as we await those remarks. Meg, what will we be listening for?
Sarah, we're not sure yet what we're going to hear from this task force. Already today, we are hearing about almost unprecedented measures being taken by the government. The CDC said that it had put its first quarantine in place in 50 years about that State Department plane that transported 195 passengers back from China into the United States. They are putting that quarantine order in effect for 14 days from when they left Wuhan, China. They say they haven't put such an order in effect since the 1960s, when there was a scare around smallpox. The commentary coming from the CDC around that is that they would rather be remembered for overreacting than for underreacting in this situation. Now, as you look at the members of that coronavirus task force, you've got the leaders of the CDC, the National Institutes for Allergy and Infectious Disease, also representatives from Homeland Security, the Department of Transportation, and of course, the State Department has already stepped up its travel guidance for China, recommending not to travel there because of the novel coronavirus. So we are wondering, will there be any further and stronger words about travel potentially? We just don't know. And of course, yesterday, when the World Health Organization declared the public health emergency of international concern, they recommended against countries putting those kinds of travel restrictions in place. Their argument essentially is that they're not only ineffective, but they can sometimes hinder efforts to try to provide aid and can take away resources and focus from efforts that actually do work to try to isolate and contain these kinds of outbreaks. So we are seeing reactions, directly in opposition to what the WHO was guiding yesterday, guys.
Meg, thanks so much for that. Stay close. We'll want your expertise as we see the results of that press conference due to start any moment, and we will, of course, take it live when it begins.
And the market is moving on these headlines. Yesterday, we saw it when the WHO did declare that global emergency, but did stop short of recommending that people don't travel or trade to China. The market saw some relief, but then it gave it up, Mike, when we learned that the U.S. was banning travel. to China. So it feels like we are being whipsawed here by headlines around this news.
So we're vulnerable to any sign that there's a broadening or intensification of the economic impact and the human impact of this virus, but also you have traders and their machines very twitchy to look for that moment of peak emotional desperation around this. And that was what yesterday was. By the way, I had people tell me this week, when it's on the cover of The Economist, that's when you buy. Guess what? It's on the cover of The Economist right now, but that doesn't mean anything at this point.
Well,
okay? Too many people are trying to be very cute about handicapping.
That cover came out this morning, and we're just hit down 660 points briefly, so over the 650 mark. Also meant the S&P 500 down more than 2% itself. The NASDAQ right around that level, just less than 2% declines. Barbara, when you look at this, are there any stocks out there or sectors out there that you are tempted to be buying because you've been waiting for this opportunity and they're not linked or exposed to China?
Well, it's interesting because even before the coronavirus and concerns about it taking a nick out of global GDP, you really were seeing growth stocks, not the cyclicals, which you would expect if the world is reflating. You would expect those sectors to do well, and I think I'm definitely not looking in that area because now we are gonna have slower growth. So I just have been I've been well positioned in terms of the growth stocks, fortunately, and so I'm just waiting. I've been waiting for a pullback to add to some favorite positions, and so I'm not doing that yet. But I'm also starting to look at some of the airlines because there will be a big opportunity here, and maybe it's today, but I'm not doing it today.
Not yet for you.
No.
Tony Dwyer, where do you want to be positioned sector-wise when the market comes back?
When we downgraded the market 2 weeks ago, Sarah, we neutralized all of our sector performance, but we're going to go on offense. I'm going to be a little more offensive because if the market continues to trend lower like this, and the situation in China gets worse and it spreads globally, the amount of monetary stimulus and fiscal stimulus that is going to take place will be almost like you're coming out of a recession kind of trade. So when our indicators hit the levels that they need to hit for us to really get back in there, and they'll be close at some point next week, I'm going to be on offense. I'm not going to be on defense. This is already pricing in the global slowdown. You're going to get a monetary and fiscal response.
But Tony, only from China, right? I mean, what's the Eurozone going to do in the short term?
Well, I got to say that I don't think it's just China. I think China gives the virus gives you an excuse to add some more stimulus, especially given the GDP numbers that you mentioned earlier. Well, the global economy is not doing well.
What can the Eurozone do?
Well, they're already buying corporate debt. They can. Honestly, I would love to tell you I knew. And I didn't know that they were going to do that in 2016. So, again, as long as your primary currency, there are tools that they have and ideas that they have that are way above my brain grade. But I know
there are always more tools.
There's always more tools.
Will you ask Christine?
You're not a primary currency.
What she's planning.
Yeah, I mean, they could go deeper negative. They could buy stocks.
But my point is that the debate over the last 3 months had started to pivot to being further cuts into negative territory is a bad thing on the economy, that we'd crossed the point where looser and looser and looser was actually helping, and so you're stuck in this position where...
That's why we're looking more... The markets really are saying, who can move here, who has the flexibility?
Well, the Fed does.
The Fed can go within the next few months if they see fit. If you really have inflation expectations crashing, which is now their bogey. And, of course, as Tony says, China can just kind of, open the jets if in fact, they get past this point of just being in containment mode.
Again, I just think the Eurozone is going to be more linked to China's slowdown than the US and has less ammunition. So that was kind of my point. Anyway, we're down 670, Mike.
Yeah. Look, you'd almost prefer to see it. I mean, you want to see a little more of a purge because now that we're down this much, we've stopped obeying kind of the minor pullback lines. You might as well just, get further stretched and oversold and have something that looks like people had a give-up type trade, pricing in something really nasty that doesn't seem as plausible. And, that's probably not the worst thing to go into the weekend in that condition. Even though it doesn't mean you're at a low, it's probably better than not.
Down 680 on the Dow, over 2% for the S&P 500 as well. Let's check in on bond markets as well. Rick, some serious risk-off moves there too.
Yeah, I'll tell you, Wilf, nothing is going to scream how much bonds and notes and the entire Treasury curve has participated, not only as a hedge, as the risk-off mentality drops global equities, but for a variety of reasons, not the least of which are economic fundamentals. We are down 19 basis points on the week now for 2s and 10s.
Rick, just going to interrupt there, and let's get to President Trump's coronavirus task force just beginning now, the press conference.
I'm going to start by turning things over to Dr. Robert Redfield, the director of the Centers for Disease Control and Prevention, to discuss the current situation on the novel coronavirus. Dr. Redfield?
Thank you, Mr. Secretary. Let me give you an update on the current situation of the novel coronavirus. First, though, I want to emphasize that this is a serious health situation in China, but I want to emphasize that the risk to the American public currently is low. Our goal is to do all we can do to keep it that way. Second, I want to recognize the concern that the American public may have, and I want to reiterate what I just said. Currently, the risk to the American public is low. As of today, there are nearly 9,700 cases in China, with more than 200 deaths. Additionally, currently there are another 23 countries that have confirmed totally 132 cases. This also includes 12 individuals who have been confirmed in 6 countries who did not travel to China. CDC has launched an aggressive public health response focused on early case recognition, isolation of those cases identified, and contact tracing around those individuals. This response is a layered response, which includes both targeted airport screening as well as heightened education and awareness of the American healthcare community to be vigilant in ascertaining the possibility of recent travel to China when they are evaluating patients with upper respiratory tract infection. To date, we have confirmed 6 cases of this novel virus in the United States. Most recent case had no travel history to China, but was a close personal contact of one of the previous cases that we had identified through our aggressive contact tracing. In addition, there are currently 191 individuals that are under investigation. Once again, I want to emphasize that this is a significant global situation and it continues to evolve. But I also want to emphasize again that the risk at this time to the American public is low. Mr. Secretary.
Thank you, Dr. Redfield. I would now like to invite Dr. Anthony Fauci, the director of the National Institute of Allergy and Infectious Disease, to discuss the underlying rationale for the actions that I will be discussing after he concludes. Dr. Fauci?
Thank you very much, Mr. Secretary. The concept that's underlying the action that you'll hear about shortly is the issue of the unknown aspects of this particular outbreak. So let me enumerate just a few of these. I can start off by putting it into perspective by telling you I often get asked, we have an influenza outbreak here. We have about 8,000 deaths already. We have about 100,000 hospitalizations. Why are we paying such attention, and why are we doing the kinds of things we're doing here right now? Well, the reason is, despite the morbidity and mortality with influenza, there's a certainty, for example, of seasonal flu. I can tell you all guaranteed that as we get into March and April, the flu cases are going to go down. You could predict pretty accurately what the range of the mortality is and the hospitalizations, as we've done over the years. The issue now with this is that there's a lot of unknowns. As you can see just from the media, the number of cases have steeply inclined each and every day. You know that in the beginning, we were not sure if there were asymptomatic infection, which would make it a much broader outbreak than what we're seeing. Now we know for sure that there are. It was not clear whether an asymptomatic person could transmit it to someone while they were asymptomatic. Now we know from a recent report from Germany that that is absolutely the case. There are a number of countries outside of China that have travel-related cases, and now what we're seeing is that there are secondary cases from them. And as Bob mentioned, we also have that in this country. The WHO has issued, as you know, a public health emergency of international concern declaration. if you put all these things together, I underscore what Bob said. We still have a low risk to the American public, but we want to keep it at a low risk. And because there are so many unknowns here, we're going to take the action that the Secretary will describe in a temporary way to make sure we mitigate as best as we possibly can this risk. Thank you.
Thank you, Dr. Fauci. Today, President Trump took decisive action to minimize the risk of the spread of novel coronavirus in the United States. Since taking office, President Trump has been clear. His top priority is the safety of the American people. In addition to the steps that the doctors have outlined, we continue to operationalize a multi-layered, cross-agency public health response. Following the World Health Organization's decision to declare the 2019 novel coronavirus a public health emergency of international concern, I have today declared that the coronavirus presents a public health emergency in the United States. The actions we have taken and continue to take complement the work of China and the World Health Organization to contain the outbreak within China. In accordance with the declaration, beginning at 5 p.m. Eastern Standard Time, Sunday, February the 2nd, the United States government will implement temporary measures to increase our abilities to detect and contain the coronavirus proactively and aggressively. Any U.S. citizen returning to the United States who has been in Hubei province in the previous 14 days will be subject to up to 14 days of mandatory quarantine to ensure they are provided proper medical care and health screening. To be clear, this applies only to U.S. citizens who have been in Hubei province in the past 14 days prior to their attempted entry into the United States. Any U.S. citizen returning to the United States who has been in the rest of mainland China within the previous 14 days will undergo proactive entry health screening at a select number of ports of entry and up to 14 days of monitored self-quarantine to ensure they've not contracted the virus and do not pose a public health risk. Additionally, the President has signed a presidential proclamation using his authority pursuant to Section 212F of the Immigration and Nationality Act, temporarily suspending the entry into the United States of foreign nationals who pose a risk of transmitting the 2019 novel coronavirus. As a result, foreign nationals, other than immediate family of U.S. citizens and permanent residents who have traveled in China within the last 14 days, will be denied entry into the United States for this time. Once again, these actions will become effective at 5 p.m. Eastern Standard Time, Sunday, February 2nd. These prudent, targeted, and temporary actions will decrease the pressure on public health officials screening incoming travelers, expedite the processing of U.S. citizens and permanent residents returning from China, and ensure resources are focused on the health and safety of the American people. I want to stress, the risk of infection for Americans remains low. And with these and our previous actions, we are working to keep the risk low. All agencies are working aggressively to monitor this continually evolving situation and to keep the public informed in a constantly transparent way. The United States appreciates China's efforts and coordination with public health officials across the globe and continues to encourage the highest levels of transparency. It is likely that we will continue to see more cases in the United States in the coming days and weeks, including some limited person-to-person transmission. The American public can be assured the full weight of the U.S. government is working to safeguard the health and safety of the American people. I'd now like to invite Deputy Secretary of State Steve Biegun for an update.
Good afternoon, and thank you, Secretary Azar. My name is Steve Began. I'm the Deputy Secretary of State, and I represent the State Department on the President's novel coronavirus task force. Let me describe briefly the role of the Department of State in the proceedings of this task force and our contributions. Our first responsibility is to monitor events on the ground in China, where we have the presence of U.S. diplomats, and to give clear and accurate advice to American citizens, and in particular, American travelers considering visiting or staying in China. In this particular case, this includes identifying any health or safety risks to which they may be subjected, but also, very importantly, identifying their access to essential services such as health care in parts of China that are affected by this coronavirus. China has an excellent healthcare system, but in parts of the country, it is simply overwhelmed in the accessibility to that healthcare for any reason, including potential infection, but also any other type of accident in need of medical care may be compromised during the Chinese government's own treatment of the consequences of this virus. Finally, we also make our judgments based upon any obstacles, particularly obstacles to movement, that American citizens might face in the country. And in China, we have seen barriers to travel, both within and without China, as well as between the United States and China. And so we have given prudent advice over the course of the week to American citizens in order for them to allow them to make the best possible choices for themselves. Our second responsibility is to assist U.S. citizens in the affected areas as much as possible. Because we have a presence on the ground, we can provide advice, and in some cases we can make other arrangements. But I want to emphasize this is as possible, and we will continue to review what we can do in certain circumstances. Finally, and very importantly, the core mission of the Department of State is to work closely with our international partners. And in this case, we are working very closely with the Chinese government in order to address a number of related matters. But let me start on behalf of the President and the Secretary of State by extending our deepest compassion to the people of China. This has been a very difficult time for the Chinese people. It came at a point of their peak holiday season. Many are affected. Many have lost loved ones or are enduring the illness of loved ones. And I want the Chinese people to know that they have the deepest sympathies of the United States of America. Let me also say and echo what Secretary Azar said, which is we are deeply appreciative of the close cooperation we have with the Chinese government as we work together to try to find appropriate ways to address any risks and challenges from this virus. And finally, the United States will continue to cooperate with China in ways that we could potentially provide assistance, including technical assistance, and also to the extent possible, any critical supplies that the Chinese need in order to address this virus. And we are working very hard to find donors and make arrangements so that we can undertake a robust effort to help the Chinese people get their arms around this outbreak. Thank you.
Thank you, Secretary Began. Let me next invite the Acting Deputy Secretary of the Department of Homeland Security, Ken Cuccinelli, to take the podium for some comments.
Thank you. Thank you, Mr. Secretary. I am Ken Cuccinelli. I'm the Acting Deputy Secretary of the Department of Homeland Security, and I'm the department's representative on the task force led by Secretary Azar. Several elements of the Department of Homeland Security are engaged in implementing the medical strategy you heard described here, including Customs Border Protection, which stands at our land ports, seaports, and airports, and I'll come back to the airports in a moment, particularly the Office of Field Operations personnel who you see when you come back into the country from your travels. They're the first line of defense when you land and come to the country. Additionally engaged is TSA, the security and the engagement with the airlines. Our chief medical officer in the department is in CWMD, and we're providing medical support at the airports. So we're using contract authority that we have to backfill the CDC personnel so they can be freed up for other missions at the airports where medical screening is being focused. FEMA continues to prepare and support HHS preparations themselves, and then the United States Coast Guard, of course, commands the ports of the United States and deals with incoming shipping, which is obviously slower than the airplanes, but coming nonetheless. To deal with each of those. The President's proclamation will have Customs Border Protection ensuring that United States citizens, legal permanent residents, and their immediate families continue to enter the United States, though those coming from Hubei province, as you heard from the Secretary, will be subject to quarantine, and the others from China to screening. We will be implementing a funneling effort at the airports. This is done under the authority of the Customs Border Protection, and it will include seven airports. So starting 5 o'clock on Sunday, Eastern Time, incoming flights from China will be funneled through 7 airports. Those airports are JFK, Chicago's O'Hare, in San Francisco, Seattle, Atlanta, Honolulu, and LAX. This is done under CBP's authority, will be executed by the Secretary of the Department of Homeland Security, consistent with the President's proclamation and in support of that effort, again, so we can focus the expertise of the medical professionals that will do the screening to implement this. We'll continue to support the medical efforts across the country, both at our ports, our land, sea, and air, as well as with personnel standing up some of the resiliency measures that HHS has been working on for some time. Thank you.
Great. Thank you, Secretary Cuccinelli. At this point, we'd be happy to take some of your questions. Kevin, would you like to get started?
Thank you, Mr. Secretary. If the risk is really low, could you talk about why to go to such an extreme as a public health emergency? If the risk is that low, why are we taking such measures more than needed?
So these are actually fairly incremental, measured steps on top of the steps we've already progressively been taking. You'll notice that many airlines have already stopped direct flights from China, have pulled that down. We're seeing a significant, and the Department of Transportation could comment on the numbers we're seeing, or Homeland Security. We've seen a significant reduction in people from the U.S. going to China, people from China coming to the U.S. already. This just helps us focus our efforts so that we, as we're dealing with the unknowns that Dr. Fauci spoke about earlier, unknowns around incubation period, unknowns about the speed of transmissibility, unknowns about asymptomatic transmission, unknowns about severity, that we take appropriate measured prudential steps so we can focus our resources, because it's the bread and butter. I've talked to you before about the bread and butter of public health is identify people who might be symptomatic or might have the disease, diagnose, isolate, treat, contact trace. That's a significant undertaking, as we have already done with the 6 individuals in the United States who've been positively identified. We have to focus those resources. John?
Mr. Secretary, the mandatory quarantine for people coming in from Hubei province, will that be home quarantine or will that be in an institutional setting?
That would be at an appropriate quarantine facility of some kind for those individuals. For the U.S. citizens returning to the United States from having been in China within the previous 14 days, they would be funneled, as Secretary Cuccinelli spoke of. They would be screened appropriately to see if they present any type of symptoms of the disease, and then they would be asked to self-isolate at home over the 14 days. But for individuals from Hubei, because that is the epicenter of this with such high immediate transmission, we feel these additional measures of quarantine for up to 14 days are appropriate. Hallie?
And could I just follow that? Have you selected specific quarantine centers?
We have selected them. We will announce those as DHS implements with the airlines that funneling activity.
To follow up on John, what does self-quarantine look like for the people who are self-quarantining? How do you enforce that? What are the mechanisms surrounding that? If you could also speak to, you just described this as sort of an incremental step. I believe this is obviously significant, the quarantine of citizens in this country. What is your message to Americans who are watching this on the news, who are seeing this, who are feeling really alarmed by the steps that this administration is taking and by the spread of coronavirus in general? They hear you say the risk is low, but then they see this action being taken, and I think some people might be freaked out by that.
I hope not. I hope that people will see that their government is taking responsible steps to protect them. These are preventive steps. The risk is low in the United States. The risk is low. of transmissibility. The risk of contracting the disease is low, but our job is to keep that risk low as much as we can by
that I
taking
think
appropriate
ultimately will
preventative
move
steps.
into
So that's
some form
the
of
approach we're
connected
taking.
TV.
Let me ask Dr. Redfield
And
if he
we
can talk a
think
bit about
Amazon is a very natural.
We do this type of quarantine and self-isolation work basically every day, working very closely. I want to stress something that we've not mentioned enough, working very closely with our state and local public health partners. They're, just as we do with emergency response, we serve as a backup and expertise and a border type force, but the state and local authorities are the backbone of our public health infrastructure, and we work with them daily to help with our quarantine stations and activities. But Dr. Redfield, can you talk a bit about self-isolation?
Thank you, Mr. Secretary. Clearly, we've stratified the risk groups here, as was already alluded to, from Hubei province, where there really is aggressive transmission. Those individuals are going to come and be required to have 14 days, up to 14 days of institutional transmission. Then there's a large category of individuals coming back to China. As we stand here today, over half of the reported cases in China now are not in Hubei, but when you look at their history, it's that they got infected. Probably over 85% of them got infected from Hubei. Those individuals will then be actively screened when they come into one of the 7 airports for significant risk, as well as any evidence of any symptoms. In the absence of any reason to advance them into a clinical evaluation at that port of entry, they will be allowed to complete their travel back to their home, where they then will be monitored by the local health departments in a self-monitoring situation in their home. We did this in the West Africa Ebola outbreak. We did it, but I want to emphasize at that time over 98% of the American public voluntarily accepted the importance of this. And we think and we continue to believe the American public will see this as something to their benefit, to their families' benefit, obviously their community's benefit. So that's the current situation.
Dr. Fauci, have one little
There's one other aspect.
We are going to continue to monitor this news conference for you, but the big headline, of course, the HHS Secretary Alex Azar has declared this a public health emergency in the United States, though a number of health officials, as you heard, said the risk to the American public is still low. The officials continue to outline some of the new measures and steps they're taking to try to fight the coronavirus and the potential spread here in the United States, including the Trump administration saying foreign nationals, aside from immediate family of U.S. citizens and permanent residents who have traveled to China within the past 14 days, will be denied entry into the U.S. They are going to continue to quarantine those, including citizens that have been to that Hubei province for 14 days, and take a number of other measures. In terms of the numbers, an update here for you. 6 confirmed cases in the United States, according to the CDC director. 191 individuals in this country are under investigation.
Of those 6 cases, only 1 hadn't traveled back from China themselves, i.e. only 1 got the disease from somebody else here in the U.S. and had very close contact with another one of those 5 cases. The market was down 689 points when that press conference began, so it did deliver some reassurance, it seems, to the markets. We closed down 603 points, just over 2%. Of course, about 6 minutes ago, the S&P was down 1.8%, the Nasdaq down 1.6%, the Russell down 2.1%. So for the week, we are looking at just over 2% of declines, and for the month of January as a whole, the Nasdaq's still higher by 2%, whereas the Dow was down 1%, the S&P down fractionally for the month as a whole. That was the first negative month for the Dow in 5. Of course, a very strong first half of January being undone in the second half.
Yeah, I mean, the S&P's moved down 1.9%, actually was its worst day since August, and the S&P losing 2.5% for the week. 2% for the week, worst week since August 2nd. Let's bring in Meg Terrell, who's been monitoring the news conference along with us to tell us a little bit more about what steps are being taken, Meg, and just how unprecedented they are in this country to fight coronavirus.
Yeah, Sarah, a lot of questions there about how extreme these measures appear to be, although Secretary Azar calling them incremental on top of what they have already implemented to try to stop the spread of this virus, taking sort of a tiered approach based on whether people are U.S. citizens, where in China they traveled, if people are foreign nationals, denying them entry if they had traveled to that region, all starting on February 2nd. I don't believe we got an end date to when these measures will end. Interestingly, they say they are going to be screening U.S. citizens at entry points in the United States for potential symptoms. But we heard at the top there from Dr. Fauci from the NIH that now asymptomatic spread has been confirmed in Germany in a patient there in a paper that was just published, I believe, in the New England Journal of Medicine today. So this is all moving very quickly, and a lot of questions, of course, are coming up about how they're going to implement all of this, including that quarantine. Now, in terms of precedent, trying to dig into this now, just from memory, we remember in Ebola in 2014 when healthcare workers, American healthcare workers, were coming back from West Africa, some states implemented mandatory quarantines, and there was a lot of controversy about that. One of the nurses who was quarantined actually sued Governor Chris Christie at the time, and there was controversy over whether these quarantines actually helped. So, guys, we're going to continue to monitor this, but some pretty big steps coming out of that coronavirus task force at the White House. Wolf.
Meg, thanks so much for that assessment. Joining us to talk about what all of this means for the market and that massive sell-off we saw today, Ben Mandel, Global Strategist at JP Morgan Asset Management. Barbara Duran is still with us, Chief Investment Officer at BDA Capital Partners. Jim Bianco also joins us from Bianco Research. He's on the Newsline. But let's start with Mike. Big sell-off, a little bit off the lows of the day, Mike, but we were down 670, 680 at the lows.
Yeah, 1.8% in a day on the S&P 500. Obviously, a little more intensity to the selling today. We had some high volume, and also some of the crowded, popular positions started to unwind a little bit. So it shows there was a little bit more of a flight instinct at work today. Obviously, capital markets in general are pricing in the risks to the global growth picture. So yields are telling that story that we really just are in a no man's land in terms of expecting a growth pickup. And we're going to probably have to figure out from the stock market perspective what the implications down the road are for this earnings comeback story. But right now, it's much more about the macro effects of all these economic restrictions related to the virus.
I mean, you don't just see it in stocks today. I think we should note the move in bonds, which has been big. The 10-year Treasury note yield now 150. We saw across the curve really lower yields, buying of Treasuries on the safe haven bet, on the lower global growth bet, perhaps more stimulus.
Yeah, I mean, it's obviously this big disinflationary, low growth, wet blanket gets thrown over the markets. The 10-year yield is not far above the lows from last summer. So all that stuff does tell a similar story. And of course, then the obvious, next step is to talk about what might a response be in terms of a Fed move, if in fact that would be in order.
But nobody knows. I mean, that's the thing. We're still in this very heightened period, Barbara, of uncertainty. Don't know the impact. We don't know how much this is going to spread or how far and how long China is going to be really cut off here from the world.
No, exactly. And what Mike was describing, we see today and this week, but especially today, is this risk-off trade. That's usually not for one day. The compounding thing here, though, is that, we're in the middle of earnings, and the earnings have been good. So we've got a lot next week. So that should actually provide some support to the market. But the reason the market is down today is not going to change overnight. As Mike said, we're going to the weekend. God knows what we're going to hear in terms of the coronavirus and where it's showing up next. So that press conference was reassuring. I must say, as a U.S. citizen, I thought, oh, okay, we do have big, oceans on either side. We are somewhat protected. But I think for investors, we're going to continue to have news on this, and I think it's going to keep the market under a little bit of pressure.
The only non-safe haven move today, I guess, was in the dollar, which slipped about 0.5% against the yen, but also against the euro and the pound. Quite a big move in the pound. Some suggesting that's linked to expectations that Bernie Sanders could do well next week. Either way, Jim Bianco, what do you make of all of this big, otherwise risk-off move, the big move in bonds and in stocks today and this week?
Yeah, I'm going to agree with Barbara. I think that the problems here are not a health problem. I'm not worried about the health of the American public or my own personal health as well. But the fact that they are announcing that a 14-day quarantine for anybody who's been to Hubei province or self-quarantine for anybody who's been to China says the whole country of China needs to do that to get beyond this. And that's going to have enormous economic implications as you take the second largest economy and disconnect it from the global economy for a period of several weeks. I think the markets are sensing the economic damage that this could do more than the health damage that it poses.
Yeah, Jim, I mean, I guess if you look at the 10-year yield at 150, what is that telling you? Is that the economic weakness story?
Yes, because the yield curve has inverted. It is below the 3-month bill. I've used the simple definition of the inverted yield curve means that the market, at least today, thinks the Fed funds rate is too high. The question is, when does the Fed come around to that thinking and start really seriously thinking about cutting the funds rate? Well, as we stay with an inverted yield curve in the next week, if we stay in it in the next week and the week after, then I think that then a Fed move will come onto the table as well, too. And that might actually also reinforce the idea that there's a dramatic slowdown underway.
You know, you saw the dollar move earlier today, Wilfred, you mentioned. It really, the market started moving after the Chicago PMI number and the weakness. That was a surprisingly weak report, and that's where we saw the dollar. The stock market kind of fell out of bed, buying of bonds. And this view that, you know, things were looking good going into the year, and now maybe they were on a shakier start.
It's literally the way it is. At the highs, it seems like you can do no wrong, and the consumer looks great, earnings are on the upturn, credit markets are perfect, flows into stock funds, volatility is low. Why wouldn't it be great? So when things start to turn, you start finding things that all of a sudden don't look as wonderful. And obviously, you know, Midwest manufacturing, in other contexts, we could have written it off. Bernie Sanders high in the polls in another week. Maybe that's just noise, but it seems like one thing on top of another, and market sell-offs are like Murder on the Orient Express. Everybody did it in the end. Everyone was the murderer, even if only one did the killing.
Barbara, where do you want to be positioned in terms of the growth stocks versus the safe havens in this environment? Is this the opportunity to get back into the growth stocks?
I think so. I think ultimately it will be, because I think that's been the conundrum. You've had all these, you know, stocks have run and run and run, and where do you get in? If you missed Apple or you missed Amazon, when do you get in? And I think an opportunity will come up, because I think the defensives, they're pretty fully valued. Like Colgate today reported great numbers, but the stock is fairly valued. So, you know, where do you go? I think it'll be an opportunity to rotate back in.
Ben, is this a buying opportunity in your eyes?
Well, first of all, hard to overstate the gravity of this situation for the individuals involved here. From the perspective of a multi-asset investor, we've been risk on since, for about 2 months now. And of course, a very painful week for that position, a very painful day today. But at the end of the day, I'm not sure that changes the underlying macro situation. Coronavirus at its core is a natural disaster, and we can debate the depth of it and the extent of it, but the shape of it, insofar as it's going to create a steep downdraft to growth for the affected regions immediately, and then you make that back over the course of, you know, the next few quarters or even throughout the year this year, that has not changed. And so I think we're holding the line on equities. I would not say it's a buying opportunity given the uncertainty. And to your earlier points, I think it's emphasizing the key aspects of a coherent multi-asset portfolio in this environment. One of them is that Treasuries is your best insurance policy against downside risk here. And the way that Treasuries have been trading have just ratcheted down. Every time you get a sell-off, Treasury yields fall, and they don't bounce when equities bounce. And so from the perspective of where do you want to take risk, we like going overweight equities versus underweight duration. And the other thing I'll just mention is that the U.S. market, so S&P, is a sensible overweight versus other equity markets in this environment. The high ROE, the decent earnings, the high quality market, that's exactly where you're going to see some protection during off days. And during this week, that's exactly what you saw.
Everyone stay with us. Want to hit oil. The XOP has been absolutely crushed in January. Just saw its worst month since September 2018. Dom Chu with a deeper dive. into that one. Tom.
All right, so Sarah, we've got oil prices continuing that near-term downtrend that we've seen for weeks and months now as the fears over the economic impact of the coronavirus, as you guys have been talking about, work their way through the markets. Now, this is much of the world's second biggest economy, China, that remains in lockdown as the government looks to contain this infection. China, the world's second biggest consumer of crude oil. It's also the world's biggest importer of crude oil. That's the macro picture. A couple of big earnings moves to talk about today. America's two biggest energy companies are lower on the day as well. You've got ExxonMobil reporting profits that missed analyst forecasts, hurt by shorter-term supply issues in its refining and chemicals business. Then you've got Chevron, better than expected profits, but revenues trailed estimates, hurt by, among other things, those weaker oil and natural gas prices. So Wilfred, Sarah, Michael, as we talk about the dynamic here, one of the other places pricing in that slowdown, not just treasuries, but commodity markets and oil especially, guys. Back over to you.
Tom, thanks so much for that. Big declines today, this week, and for the month there. Airlines also sinking today. Phil LeBeau has more on that for us. Phil.
Hey, Wilf, the three major U.S. airlines that fly directly to China, all of them today announcing that they're going to be suspending their flights to mainland China, though you still have American and United that will be doing flights to Hong Kong. So it'll be interesting to see how this directive from the federal government impacts those flights. Here are the suspension of flights. American starting immediately through March 27th, Delta and United on February 6th. By the way, you see those dates of April and March in terms of when the flight restrictions are over. Those can be shifted. They can move back further or they can move up depending on what happens with the coronavirus. Guys, the most interesting thing I heard in that press conference in the White House is when they said that foreign nationals who have been to China in the last 14 days, if they're not an immediate relative, they may be denied entry to the United States if they've been in China in the last 14 days. That's not just somebody who's in China coming to the U.S. That also could apply to somebody, let's say, who's in Vietnam, who is just in China, or somebody who is in Japan or in Korea. So this will be really interesting to see how this shakes out over the next week and a half. But let's be clear here. That message will be sent to all of the airports with flights coming into the U.S. So those people will know before they even go through the ticketing process, you get to the U.S. and you've been in China in the last 2 weeks, you are going to be denied entry.
Phil, thanks so much for that. Big decline there in the airlines, down about 14% or so over a month for United Airlines. Seema Modi is having a look at some of the biggest movers for us over the month overall. Seema.
Yeah, last day of the month and a rather volatile one, Wilfred. The Dow closing lower by 603 points off the lows of the session. But if you take a look at the sector losers, really dominated by energy, already down double-digit percentage, of down 11% for the month of January. Materials down about 6%. The names that weighed the most on the Dow, not just today, but for the month, you'll see it's Dow, Chevron, ExxonMobil, Caterpillar down another 11% following a weak guide for 2020. Those comments from CEO Jim Appleby about demand and persistent pressures that the company is facing. That stock down about 11%. The names that were able to hold on to gains for this month, despite the volatility that we saw this week. Name like L Brands, it was one of the losers last year, but closing the month higher by 27%. And then those home builders, much of that having to do with lower rates. Lennar, Pulte Group seeing double-digit gains, guys, for this month. Back to you.
Seema, thanks so much for that. Some big movers, of course. Now, Tom Lee, the Front Strat analyst, is able to join us. And there are the major averages, by the way, for today, down 2% for the Dow. Health and Human Services Secretary Alex Azar declared the outbreak a public health emergency moments ago. The latest number of cases risen to nearly 10,000, with more than 200 deaths confirmed overall. As we mentioned, Tom Lee from Front Strat able to join us now. Tom, what's your take as to the scale of sell-off we've seen in the market in relation to this health scare?
I think the sell-off's understandable because, a virus like this is going to raise economic uncertainties in people's minds. So I think risk premia should be rising. Stocks have had a great run, so I'm not surprised it's taking place. And when you look at markets like high yield, which lead equities, high yield spreads have really blown out. The VIX futures market has inverted, and that's usually telling us a deeper sell-off is underway. So I think markets are going to be kind of sloppy in the short term, but I don't think it's a doomsayer, like, a catastrophic recession's around the corner. I think it's just a short-term risk off.